What's up, everybody? How's it going? Welcome to the Zeta Live earnings watch party. It's going to be me, Wolfmatica, Akash, and Knots will be joining us here in a little bit. We're just going to be talking shop. We're just going to be talking about Zeta. We're going to be talking about these earnings that are about to come out here in, about 15 or so minutes after market close. Really excited about the future of Zeta. And just remember, guys, the markets are down today, but we need to remember that with a company like Zeta and Oscar and Hims and other companies that we talk about, even though like someone like me, I do both trading and investing, we need to understand when it's an investment for the long term and we're thinking out more than just we're thinking out past this 1-2% down day. We're thinking about months, years, decades, even sometimes, guys. We're thinking about the future of this company, getting in early like people did with Palantir, Nvidia, and saw massive gains. That's the whole point of long-term investing. It's finding gems, it's finding a needle in a haystack, and it's holding on to those companies that you truly have high conviction in, you believe in them for the long term. Yes, I got this awesome Zeta hat, Athena Zeta hat. Got it for free while I was at Zeta Global Live. Super awesome. David Steinberg told me himself that he actually designed this logo for the hat. And I was like, really, David? You designed a logo for a hat and you're a CEO of a $5 billion market cap company? And he's like, yeah, I was at home and I was really getting into it and I really enjoyed doing it. And I'm just like, that should kind of show you the kind of character that this guy is. He's designing a logo for a hat for and it was only these are a limited quantity that they gave out at Zeta Global Live. So I'll have this hat for a very long time. I know other influencers wear their Palantir hats and everything like that when they go out. So super super pumped to have some merch, some Zeta merch just for me. But yeah, I'll let Wealthmatica and Akash introduce themselves and talk a little bit, and then we'll kind of just chit chat about everything.
All right, Cash. I'll take a shot at it here, guys. So everybody should know me by now. If you haven't heard my voice, this is my voice. I'm probably one of the foremost people on X who talks about Zeta. I'm an absolute Zeta bull, as some say. I've written multiple reports on Zeta, and I spend a lot of my time kind of diving into minutia, really understanding the company because I know what on face value, it's a complicated company to understand, and I'm here to help everybody understand it, break it down, know what you're investing in, because at the end of the day, if you don't know what you're investing in, you're just gambling, and that's not what we're trying to do here. Cash, over to you.
Hey, thanks. And yeah, I mean, I think I'm pretty new to investing and all this stuff. So I think in early this year, when I started looking at some of the opportunities I want to kind of diversify and invest in, I came across Wealthmatica's report, which really helped me kind of quickly kind of understand the company and then invest into it. Because what happens is like a lot of the times people are like, hey, I want to research this company, and then they spend a couple of days or weeks and then the stock rises and they're like, I missed this thing. But I think that report really helped me understand what are some of the bull points, what are some of the risks. I think lawsuit was one of that, which kind of made me a little bit skeptical. But after I saw a couple of interviews of David and some of the auditing work that has been done, I feel like there's just gonna be a tailwind once all the risks of the lawsuit goes away. So yeah, I mean, here I am, and I think I've been in this space for a long time. I understand how companies are like navigating all the bulky workloads around currently using like outdated market tools and platforms. And I see that they are wanting to go and move into this like more nimble sort of like providers like Zeta, wherein they want to quickly get the output. Like every dollar that they invest in, they want to get the returns much better. I think Zeta is providing that. And one of the comments from David was that I think for every dollar we invest, we kind of get back I think was it $6 to $7. So I think that's pretty impressive. So yeah, I mean, hoping for the best today and see what we get out of the results.
Yeah. I appreciate you guys joining me on this. I sent out the message to a couple people. Obviously not everybody can join, but I really tried any company that I'm big into, that I'm covering, I want to bring in everybody else that's covering that company in a big way, and that has been for a little while, as well, and has good thoughts, because doing these earnings reactions and getting multiple people's points of view and understanding what's going on with the company is really good, in my opinion, and just kind of creating a community, right? You can't create a big community without, I don't want to say people at the top, but influencers, right? Kind of being like the staples of that community. We've seen it with Palantir with Amit. We've seen it with Hood, Robin Hood with Amit. A lot of communities do start with Amit, but there's other great influencers out there as well that start these great communities for any stock, right? I feel like I'm one of those people of a couple other people, for Oscar, Zeta, D Local, and a couple other names that I'm into. But I feel like, you can't be like the pillar or the staple for all names, right? And I definitely don't want to be that. My core three have been and will continue to be, I'll say four, because the FLNC, Fluence Energy, is definitely another one that's big for me right now. But yeah, it's Oscar, Zeta, D Local, and Fluence Energy. Those are like my big four. Definitely into hymns and all these and a lot of other names. But yeah, so appreciate everybody being here. We're gonna go over Zeta. We're gonna go over some things before earnings come out here in like 7 minutes or so. And yeah, if you guys have any questions, leave them in the chat. And yeah, what else you guys got?
I sent a couple links into the chat if you want to pull some of them up. Take a look at clip 1. Let's just dive into for some people who don't understand what Zeta is. Let's talk a little bit about it. Here's a good clip from David Steinberg himself. I'm sure Ronnie can pull that up. I think that's the last one. Let's go to the top. Here, I'll send it to you on X, buddy. I'll send it to you. There we go. Oops. There we go. Just send it to you.
Okay, it is that one. All right. Did you hear that? I want to make sure that this.
No, I couldn't hear it.
Yeah, I gotta. Gotta make sure when I share it, it enables audio. There we go. All right.
Sweet.
Is it possible to quantify what AI and those tools you just talked about, David, mean for your bottom and top lines?
For every dollar a enterprise client spends using our AI and software, we return $5 to $7 in revenue today. Our goal is to continue to evolve it. We made a very large deal last week. We bought Marigold's enterprise business. And part of that was a big loyalty platform. So we're now going to be able to ingest SKU level data. What are people buying down to the item to train our algorithms? And our goal at Zeta, even though at $5 to $7 return for every dollar that's spent through us is 100% higher than our next closest competitor, we want to get to a $10 return using our data and our artificial intelligence to more efficiently run things.
David, is it possible to quantify what AI and those tools you just talked about?
All right. So that got nice kind of what. All right, I think I got some feedback.
Yeah, who's echoing? You hear echo?
Wait, talk again. Oh, it's me. No, it's not. Never mind.
I don't hear echo.
I did hear one.
I think it was when you had the X video on.
Yeah.
Back through.
We're good now. We're good now. We got a nice block here of everybody. Welcome in, Nick.
There we go.
Hey,
Welcome,
hey.
buddy.
I need like one of those like little like soundboards, like the fake clapping people. Like, yay!
We're about 4 minutes out here, guys. 4 minutes out.
Someone said markets dumped into close. They definitely did.
Let's take a look. You want to pull it up?
Zeta dumped into close too, 5% down. But again, like somebody commented today. Oh, get back on here. Somebody commented on one of my posts and they're like, "Oh man, Zeta's dumping." And I'm like, the whole market's dumping. What are you looking at? Like,
Yeah.
the whole market's dumping. Like, what are we talking about, guys? Like, come on.
Yeah, I actually added today. I've been adding Zeta all week, frankly.
Yeah,
Actually,
it's
last 7 days.
17. I can't believe like Oscar and Hims are at these price. Or, well, yeah, Oscar, Hims, and Zeta. All these companies at these prices, man. I can't believe
Yeah,
it.
man. It's there's opportunities out there. If you're willing to jump in, there's opportunities out there. So before we hop into earnings, and I mean, we got 3 minutes here. There was one very first link you pulled up. The only little bit, if you want to go ahead and pull that up again, I think it's in. If you go to StreamYard, last link says only Q3 data insight we have. Yeah, literally this image that I'm about to pull up. It was a little snippet insight into the Q3 report. We got feedback again. Coming through X.
Yeah, I hear that too.
Oh, I don't hear it. But
whatever setting you turned on for the video.
Do you have the X open too? If you close that.
The what?
Same thing. I don't know. Someone has. Hey, wait. Ronnie, talk to you.
Yeah.
That's interesting. I don't have anything on in my background.
Zeta just bounced from like 10 cents. We should be good now. I think it's only when I'm opening up stuff. So.
Yeah, it's probably only on X. Whatever feature you turned on X in order to hear the volume when we play that video creates this feedback loop.
Yeah.
But I can just throw this up, share my screen here in a second. Let me do that.
Wow, Oscar just got killed.
Did it really?
Yeah, 30 cents there.
Oh yeah.
Still getting somebody.
Rivian, yeah, I hear that too.
Okay.
It's whenever you bring up that second screen is when it happens.
Yeah. Oh, it's because it's sharing audio, so I just won't share audio with it.
Okay. Yeah, Oscar's getting murdered right now. Zeta has dropped. Rivian is popping higher. NQ is going higher here. I mean, it was dropping into the close, but it's getting a little bounce here into the close. We have a second, and market is closed. Rivian, Zeta, AMD. I know we have Upstart. There's a couple other names. I'm focused on Rivian, Zeta, AMD for sure, personally.
Yeah, I'm just waiting here for that report to drop.
Yeah, whenever someone gets it, just shout it out.
Yeah, it's what, like 5 minutes past?
Yeah. All right, Zivian. I said Zivian. Zivian. You got me all messed up. Rivian, Zeta, AMD, Upstart, you said?
Yeah, I know Upstart's one. I heard people talking about it. I personally think Zeta's going to obviously double beat like they have been. I also think they're going to guide up. And I think I saw multiple of you talking about, possibly the positive EPS or actual positive earnings.
Yeah.
Now with them, what happened?
I don't know if you saw my my prediction for Zeta, but it was awfully hefty.
Yeah.
If my prediction for Zeta earnings come through, is very bullish. If it comes through, then this thing's gonna be up like a rocket, dude.
Yeah, that's true. I think, to be honest, guys, I'll be like very transparent. I believe that Zeta will not become net profitable this quarter. I think the likelihood, depending on how this quarter ends, the likelihood that we hit net profitability by end of this financial year could dramatically increase today, which could send the stock up quite high. However, odds are is that we at current trajectory Q1 2026, we hit net profitability.
That is up 2%.
Interesting. I don't have anything on the website yet.
Nothing
Which,
yet,
yeah,
though.
like,
It's just,
like
yeah,
nothing's
it's
out
just
yet. Yeah.
moving. We still got 3 minutes here for all of them.
Estimated earnings are supposed to be 18 cents, and then revenue is supposed to be 328.09 million. My prediction was 380 to 400 million. Again, very lofty revenue estimates there, and I think that more so comes off of I think the business. Based on the business, I think that they did based at Global, right? Is that a Global Live? And then 21 cents versus 18 cents.
Okay.
And then a guide up, obviously. But we'll see.
Yeah, keep in mind, Zeta does not report EPS. They report revenue, adjusted EBITDA, and adjusted EBITDA margin.
Yeah.
Yeah.
And that's
Yeah,
because
they're not net
Yeah,
income.
the only thing I
positive
hate
yet.
about Zeta, and I made this pretty clear, is their stock-based compensation is just way too high. And obviously, I know a lot of people see that as well, but
and that's actually their fourth pillar, right? Like the way I kind of describe it to people, there's currently 3 to 4 pillars in front of them that are headwinds, and they're all bound to be knocked down eventually, right? One of them is that legal headwind. 2, this one's kind of weaker. It's that AI SaaS narrative that AI is going to kill SaaS. Ironically, kind of like Palantir, AI is Zeta, AI is Palantir. It's at the core of these companies. These companies were built around that premise. AI is not actually going to negatively impact them. Frankly, they're tailwinds for these companies. 2 is 3 is net profitability, right? Once Zeta overcomes that headwind, that becomes a tailwind, right? Once Zeta becomes net profitable, shareholders are really going to like that. It's going to gain a lot of attention. And then finally is the stock-based compensation. Now, as that starts to come down and the company starts to grow and free cash flow continues to scale, stock-based compensation is going to look much, much smaller and smaller over time. As long as the percentage of revenue for stock-based compensation decreases over time and continues to dramatically decrease, we should be okay. Now, something to really look at here, guys, is if the Marigold acquisition, well, at least the parts of their company they're acquiring, impacts the guide for stock-based compensation. I'm curious to see if the company actually factored that into their guide historically for the calendar year. If they did, this team is pretty elite at forecasting. It seems like this was sort of in their books for quite some time that they wanted to do this acquisition. Now the question is, did they factor that into guidance, right? Because if they factor in more stock-based compensation into the financial year 2025 or 2026, that may be a little troublesome. It'll be annoying, that's for sure. But if it's already included, that's a good sign. Very, very good sign.
Boom, 8%. 8%.
Wow. 8%. Okay. Nothing yet on the website, guys.
Yeah.
News is out. By the way, Rivian got a double beat. It is flat as a board. We have Zeta news here. 11%. Hold on, let me pull it up for you. Give me a second.
What's tanking?
Zeta's up 6% now. It's moving around.
Yeah, nothing up.
Tanking. Up now 5%, 6%, 8%.
I just
was just about to buy 100 shares at $17.
Somebody's day trading. Somebody, or sorry, aftermarket trading.
I don't know where I just had that.
8%. It's at 9%. Now 6%, 7%, 9%.
I'm just here spamming the website, man.
I just had it, and I don't know where it went.
You just had the results?
Yeah.
It usually shows up on the news page, right? I'm looking over there.
Results page.
Yeah, I just had it.
No way, really?
I don't know.
On their page. Oh, there it's up.
Q3 release there, it's out.
Up. Oh, 28%.
337.
Yeah.
Wow. We delivered.
Yeah, they beat on revenue, beat on EBITDA very nicely.
Wow.
Yeah, I got it right here.
Yeah, this is good, guys. Okay, Ronnie, you go for it.
We're up. All right. Delivered revenue of $337 million, an increase 26% year over year, exceeding midpoint of guidance. $9 million and 28% growth year over year. We have generated net cash provided operating of 58 million, increased 68% year over year, margins of 17%, free cash flow of 47 million, increased 83% year over year, record margin of 14%, and achieved rule of 40 free cash flow margin and revenue growth. Beautiful. Grew super scaled customer count to 180 and increased 12 customers quarter over quarter, 25%. Increasing fiscal year 2025 adjusted EBITDA and free cash flow guidance by more than third quarter beat. Establishing initial 2026 guidance ahead of consensus revenue, adjusted EBITDA, and free cash flow. Initial 2026 guidance calls for a 6th straight year of revenue growth, over 20%. Beautiful, with free cash flow margin expansion. Wow.
Wow. Yeah, this is a massive beat, guys.
And we're only up 4%. Let me buy 100 shares right now because he's like being up 5%. Right, just bought 100 shares. Actually, you know what? Let me buy another 100 shares while we're only up 4% because
wow, guys,
that's a monster. We're only up 3%. This is a fake out. You remember you guys remember last quarter? They crushed it, and I was sitting here on a live stream, and I was like, I'm buying. And then it was the next day, they ran up 20%. It's same thing probably here. Maybe not if markets keep bleeding, but guys, you are being able to get this company at $17.39 after those kind of earnings. Yeah. I'm buying more right now as we speak. I'm just flicking.
No, that was good. That was definitely good news.
We'll go into it more, guys. I mean, wow.
I'm very impressed right now. Sorry, I'm just digesting some of this, reading. Give you guys some hot takes in a second here, trying to get something up. Yeah, guys, this is a great quarter. This is really good. It beat my expectations. This is nice.
Yep. So we definitely didn't get close to my revenue of 380 million. I was clearly crazy when I put that out there. But
right, I believe.
But hey, they still crushed it. Let me see.
Yeah.
Presentation.
The average revenue per user is also very high. I think it's increased from last quarter as well. That's good.
Wow. Now we're up 1.5%.
Yeah.
Oh, I need to buy more. I'm not even joking. This is stupid.
All right. I just threw up a post. That's great. Wow. Yeah, year over year adjusted EBITDA is up 46%.
Guys, they just double beat and raised guidance.
That's unreal.
And said free cash flow margins were going to expand. And they gave 2026 guidance, basically, saying that they're going to do another 20% year over year revenue growth year in 2026, and that they're going to do more free cash flow. They're going to do better free cash flow margins and normal margins. What are we talking about here? What are we talking about? And this is an AI play. They get no love for being an AI play. Zero love. Everybody wants to talk about, trust me, I get the share dilution, but Palantir to this day is still diluting shares like crazy. So I get Zeta, and like the thing is, they worked on it the last couple quarters. They've started coming down. They've been flat or coming down the last couple quarters. We'll look at it here in a minute. What they did this quarter. Obviously, I just need to buy some more for the long-term portfolio.
Wow.
Because this is insane.
Wow.
Like we're getting this at $17 right now.
It's insane, man. This is ridiculously cheap.
Based on a DCF, not even taken in today's beat. This is a $30 stock. A $30 stock, guys. That's not a made-up number. That's based on their discounted cash flow. That's based on Warren Buffett and Charlie Munger's favorite valuation tool.
Just to imagine, this was like, what, 36 last year? I mean, it's...
Yeah. All because the lawsuit. All because the lawsuit that David literally spoke into my ears. He said frivolous lawsuit out of his mouth into my ears. Like, but whatever. I just bought another 500 shares of Zeta.
So
that's
Zeta
$16.99. Beautiful.
That was great earnings on Zeta. Rivian had great earnings. I'm waiting for the 4%. AMD one.
Yeah, AMD's not out yet.
I think it's 415 or 420. I forgot when they usually do it. It's one of those two.
Yeah,
I think it's Nvidia that does the 420. I think AMD's 415.
They're all big dogs now. They're a big dog now. They're like, oh no, we're like Apple. You wait for our earnings.
Yeah, right.
Yeah. Okay, Zeta's up 3% now.
Yeah, I'm impressed, guys. This is a really good quarter. Initial 2026 guidance calls for sixth straight year of revenue growth over 20% with free cash flow margin expansion. That's unreal. That's unreal. Keep in mind their 2028 target, the 2028 target, sorry, is calling for 16% free cash flow margin.
I don't even have to look into this, and I probably am already going to be rating this like an A or A plus.
Yeah, man, this is
The only reason it would be an A over an A plus is just based off their stock-based compensation. I want to see what that comes in at.
I know.
But we're looking here now. I have it pulled up. We're looking at the presentation. Let's see.
Wow. Free cash flow grew by 83% year over year.
Yeah. 60% conversion too, 14% margin. We look
Ridiculous.
at we can update my spreadsheet right now if we wanted to.
Yeah, do that. Work on that. Okay, interesting here. Is that super skills? Yeah. Super skilled customer count grew to 180, an increase of 12 customers quarter over quarter, and up 25% year over year. That's phenomenal. So right now, one of their biggest things to do right now is not only grow their customer base, so that audience grows, so they have premium customers, but also cross-selling, right? And David's going to talk a lot about this on the call. So watch for him talking about channels and cross-selling channels. So customers who use more than one channel and customers who use 4 or more or 4 or less channels. This data is going to be very, very important, right? Because this feeds right into their average revenue per user, right? Or per subscriber in this case.
You want to see something crazy?
Yeah, show us. What's up?
Third quarter, right? They got to 14% margins. 14% free cash flow margins. With this discounted cash flow, this is them doing 12%. 12% free cash flow margin, not for 1 year, for 10 years. For the next 10 years, I'm doing 12% free cash flow margin. They just did 14%. They just did 14%, and they just guided for 2026 to be even more margin expansion and free cash flow.
Yeah.
It's a $28 stock.
Yeah. 100%.
And look at these revenue growth rates: 18%, 20, 18, 15, 17, 13, 11. Look at this. 2026. What did they just say that they're going to do? Oh, their sixth straight 20% year over year revenue growth quarter. So there you go. Bump that up to 20%. Then you can be conservative the rest of the time. You can sit here and bump this up to 14% each. And now it's a $33 stock.
Keep in mind, 2028 management guidance themselves for 2028 is a free cash flow margin of 16%. 16%. We know they sandbag. So what do you think is going to happen?
Yeah.
I think a free cash flow margin of closer to 18, maybe 20%.
Yeah. And obviously they didn't talk about, they said in this report, they didn't add in Marigold's acquisition contribution yet. So
I just straight up stole these shares at $16.99. I stole them. I stole those shares from somebody. They're up 6% now.
Give me some shares, man. Stop doing that.
One more interesting thing is that they were really close to profitability this quarter. So the net losses, I think I saw around 3 million negative. Which is like very significant improvement. Yeah, I mean, next quarter is like they might be profitable.
Wow. Yeah, guys, this may happen next quarter.
Yeah, if you go to the very end, you'll see the net loss. But yeah, I think it's really close.
Net loss? What
AMD is out.
I think
AMD's out.
They were just down $10. They are now green. Let's see.
AMD
reported earnings beat EPS 120 of the 1.09 expectation and beat revenue by 500 million. Okay. That's a big one. Let's see what their guidance is.
Wow.
Let's see.
Why is this? Oh, okay. Yeah, so $3.6 million net loss. Look at this, guys. Going from 21 to 12 to 3. Wow. They're jumping leaps and bounds to get to net income positive. That's massive. And they're growing 20% next year too.
Yeah, this is massive.
Wow. I hope the markets keep tanking though, and people just like brush this off, and then they keep sending Zeta lower, because I'll keep buying. That's what people don't understand, guys. You need to understand, like with a company like this, it's not going lower because the company, it's going lower because the market's down 2% today. Like Oscar's not going lower because Oscar's fundamentals are bad. It's going lower because people are gambling on ACA subsidies. People are gambling on government reopening and Oscar getting a big bump. And as soon as that doesn't happen, it goes down. People, they sell out their calls. They liquidate, and it keeps going down and down and down. Like whatever. Like it, if we get ACA subsidies, which I think we will, or we don't, you know, it's just a long-term, fundamentally great company. But wow, yeah, this is just
Oscar's doing some weird moves right now.
Look at this 1.1% margin or net loss margin. Wow. From 8 to 4 to 1. And it was 6.5 a year ago. This is not nice catch, Akash. Nice catch. Okay, look, boom. Stock-based compensation, 45,632.
Yeah, I went down a little bit.
It came down from last quarter. But let's see.
It came down just a little bit.
Let me see. Visual stocks actually should have. I like the graphs. Visual stocks actually update super quick. I love it. They
I
update
think
their
stock-based
charts super quick.
compensation as a percentage of revenue should keep declining. I think that's what they guided for. Which is
I'm sure they
positive.
have a slide on this actually.
Yeah, they do have that. I think they just guided for the year that they'll keep on decreasing the SPC as a percentage of revenue.
Yeah, so
Next year.
168 1 million plus customers, now to 180 guaranteed. A lot of that came from Tom Brady and Serena Williams at the Zeta Global Live.
100%. 100%. Okay, can you scroll down to slide number 7? I got something to say here. I just made a post about this.
Yeah, right here. Yep.
Yeah. So, guys, take a look at this really close. This may scare you, right? This may look like everything's slowing down. Hold up. I made a post about this the other day. Somebody asked me, okay, why is it that revenue is kind of slowing down into the mid 20s or low 20s, right? Now we know it's kind of mid 20s or high mid 20s, but people were fearing that they were guiding around 22% to 23% revenue growth for this quarter. The reason being, and you could see it here in the scaled customers, 2024 Q3, Q4 election year. So a huge portion of Zeta's revenue year to year is political, right? So they get a lot of money in from political campaigns and political spending. 2026 is US midterms. You can fully expect this pickup to be astronomical once again. And then going into 2028, once again, you can see that. So there's some cyclicality here in their revenue models, and there's their sort of lower tiered customer inflows, right? So keep that in mind. Don't let this kind of scare you. Okay. So this 4% year over year growth is fully anticipated. And you can actually go back into last quarter and see management talk about it.
Makes sense.
I should have bought 1,000 shares at $16.99. I will forever regret this decision.
Man, I was too busy reading the report to buy any shares. I really should have done that.
I know. I was very selfish. I was very selfish to you guys, and I was very selfish to everybody watching this stream. I said, I saw enough. I saw enough. Bye. You guys can wait. You can wait on seeing these numbers because I need to buy more shares.
Ronnie stole my shares, guys. He stole my shares.
I stole somebody's shares, and they're not going to be happy next year or 2 years or 3 years from now. Let's see if we can get to everything's just up and to the right. You gotta love seeing it.
Wow, that's an impressive slide. If you go to slide 9, oh my god.
Yeah. Scaled ARPU.
Wow.
Mm-hmm.
Do you see this? So the longer customers stay with us, the bigger they become. Interesting. That's pretty. Wow, man.
I want to
you can hold down also into slide 10. You can get a little nice revenue breakdown for FY 2024. So you get a good idea of how big that political spend is.
Yeah, and here's 2028 too. They're expected 2.1 billion plus in revenue target, and we just pull up the slide. 2028, 2.44 billion. So I guess I'm a little bit. That doesn't even make sense. 2.1 billion by 2028.
Okay.
Yeah, I think they're definitely sandbagging that number. Because if they're going to do 2.1 billion plus, right? We're currently, they said 20% for 2026. Yeah, they would have to way decelerate on revenue in 2027 or 2028 to hit less than, like, to hit 2.1 or less. So they sandbagging. Free cash flow,
Very impressive
340
quarter.
million. 340 million in 2026.
And this is exactly why I've been buying the last 7 days straight. Sorry, correction. 5 out of the last 7 days. I didn't know.
Guys, no joke. Like, this is. Am I sharing my screen? From a technical standpoint, guys, when you get a launch up here, when a stock has been like going down and down and down and down and down, like Zeta has, and you get this launch up here, right? That we did for like 8%, 9% move after earnings came out. Because this was the algo. This was the algorithms. When you get that, and then you sit and then you have a massive pullback and you look at the earnings and you see that it was a knockout earnings, A plus, you could trade that. You could trade that back up to this high. And look what just happened, right back up to the high. Now, I'm not saying like just because it came up here and then came down here, it's going to go back. But if you know something about fundamentals and you know something about like how they just knocked this quarter out of the ballpark, this was a no. This is why you saw me buying down here at 16.99. I didn't even get the bottom. The bottom was 16.70. I got 16.99.
It's looking to get right to those highs. 20 cents.
Yep. And I mean, you could trade that, or you could just sit there and be like, I was ready to buy any dip, even if earnings weren't the greatest, because like I just want this company. But yeah, they crushed it.
All right, guys, I'm calling it now. I think we're going to probably get around a $20 open tomorrow. I think it's pretty clear at this point.
Yeah, and I think the markets are going to bounce back tomorrow a little bit. Bounce, like I was telling you before we hopped on here. I think markets are going to bounce at least to fill the gap the next couple of days that we've made today. The gap down we made today, I think we bounce back, fill that, and then we go lower in the market.
Okay, let's shift gears for a brief minute here. Let's get a little coverage on AMD. Because market sentiment as a whole, right? Give market a little bit of confidence going into NVIDIA earnings later this month too. How did they do?
AMD, they beat on EPS, they beat on revenue, they got it higher on revenue. They're actually dropping right now. Amazon just reported, they sent out their quarterly or monthly report on what they're holding, and they sold all their AMD, and AMD just dropped on that. The actual report itself was good. They beat on everything, and they guided up. So this drop literally happened as soon as that Amazon report came out.
Interesting.
That they just sold all their shares in AMD.
And you know,
I gotta say this alpha real quick. I gotta say this alpha real quick for any traders out there, guys. Again, I just called it out on Zeta. Like whenever you get this pop from algos and then they swing this thing down here, the algos are collecting right here and then they're swinging it back up because they know it's bullish. So they steal your shares and then they run it back up. The inverse of that can be true if a company has dog crap earnings. Look at this. They dropped it. Algos spiked it back up. They got short and now they dropped it right back down to that. So just a little alpha there for you guys. Again, doesn't mean that that's always going to happen like that. But I'm assuming that they probably missed. Upstart probably missed. They probably didn't have a good quarter, and they're really been running hot. Anyways, back to everything else. Man, yeah, I should have bought 1,000 shares.
Yeah.
Honestly, I don't even care. I'm about to buy more now. Like $18. I'm still getting this at $18.
Yeah, man. Yeah, I'm just going to wait for some commentary here, and we'll wait and see. Let's see. I'll probably add some more. But yeah, ultimately, at the end of the day, I think what's ironic about the AMD sell-off here, and the reason why I bring this up about AMD is a good bellwether for the rest of the market, right? Because if AMD does well, theoretically, NVIDIA is going to do all right, right? If not, they're going to do well. Amazon selling, they could sell for any reason, right? They're not a hedge fund. They're not here to trade and buy good, high quality stocks and hold them for long periods of time. These type of companies will sell off stocks for any given reason. Who knows? Who knows what they're facing internally, and they may need some access to capital, right? For them to sell off AMD on AMD's having good earnings, to me, it doesn't really make sense. So going into tomorrow, I think Ronnie's right. I think the market's likely going to bounce back pretty hard midweek. Zeta's going to have some good earnings come out here, and we'll have to wait and see how the market is tomorrow morning. Guys, I'm a little speechless looking through this stock report here, or sorry, the presentation for Zeta Global. It's quite impressive, man. It is quite impressive.
To talk about overall markets, we are about to fill this. I've been talking about this gap for a little bit. Everybody's been like, market's great. Like, we keep on having these drops and then these rallies and these drops. And then what I think to the next few days, we're going to get this rally to this gap fill. But guys, like, we are in a downtrend right now. We came up, we double wicked, we hit a peak, and now we are clearly making lower highs, lower lows, lower highs. We're about to fill this gap. We have another gap fill down here to 611.81. I don't think we shoot down here. Here's what I think. If we do shoot down here, then I think we might bottom and then resume higher. If we hit here and then come back up to fill this gap, then I do think we're going to go lower down to this next gap after that. So me personally, I'm looking for a rally into this gap fill tomorrow, and then I look to short that with some QQQ puts down here. And then at the same time, IWM has a nice gap to fill as well. IWM has been holding this base right here about 240 multiple times. Multiple times we've wicked and held this 240 base. This volume, this gap is down to 236.92. So if we break that 240 base, which I think we will eventually, because everything else is kind of pointing down, then we're going to fill this gap. And this is exactly why I'm not really in any trades right now. Like, any kind of trades, I'm all cashed up. Still in my investments, but these are the reasons I don't like this market right now. Like, the Williams percentage range here is breaking out of the box. This has plenty of room to roll down. If this weekly rolls down, then you're seeing a 5% plus pullback in the markets. But okay, we're good on that. Yeah, Zeta almost up 9%. And I keep going back to the one chart that I keep showing over and over and over and over again. I keep showing this chart. Guys, it's just such a beautiful chart. You had such a massive run up. Then you had what? You had
That's the legal case right there.
Yep, the legal case, and they got shellacked. I don't know any company that's been this shellacked, like this hit this hard over a legal case, but they sure did. And it's funny because, like, David's like, we have insurance for this. Like companies have insurance for lawsuits. Okay, like if they get sued, they have insurance to cover lawsuits. So, man, it's just crazy. But basically, you have your launch here. You went long from 8 all the way up to $38.31. We already just talked about this is like a 33 on conservative assumptions, like a $33 stock now after today's earnings. You're just seeing again, you're getting these launch alerts. You came down, you bottomed out, and now you're just kind of curling higher. I think we're just going to keep riding this higher. Even if the market does take a crap, you might come down, but like this thing's already still beaten up. Like, it hasn't ran like other names. You know what I mean? This isn't like a different. This isn't like Oklo at all-time highs or something. So
yeah,
I totally
there
agree.
isn't really any sort of negative in the report. The only thing, when maybe you can like get your
10%.
thoughts on this, is can you guys go to slide number 6? I think the only thing I'm seeing is that the scaled customer count for 100K to 1 million, that's kind of decelerated. But yeah, overall, they're like quarter over quarter, the total count is higher, but it's just like slight deceleration on that part. Just that. Other than that, I don't see anything else.
which is obviously like countered strongly with the acceleration, the higher acceleration of the higher revenue
1 million
companies.
plus. Yeah.
Yeah, because this was like 9 mil, or sorry, 9 mil. This was nine customers.
Yeah.
you get so used to reading all these numbers and millions and stuff. Okay, 9 customers at $1 million plus, and now you just did 12, right?
Yeah.
So that's very solid. And then here you did 11, and then before that you did 4. So this is one of their biggest ones. Look at this, like they stayed stagnant there for 2024. Jeez. But yeah, so one negative. I need to find that stock-based compensation before I keep getting sidetracked. It's kind of hard. Not that there's so much stuff going on in this market, like it tanking, Zeta doing good, rising, AMD coming down. So you said Amazon sold its stake in AMD?
Seems that way.
You know why I did
Yes.
that, right? You know why I did that? Because they're building their own chips. Have you seen those like
chips.
videos and like information on Amazon building their own chips and actually running like their centers off of them? They're
Yeah.
actually making pretty good chips.
Yeah, it looks like most of Anthropic is running off of Cranium, and eventually they're going to be scaling out more facilities running off of Cranium. I believe if you look at, I think I made a post about that recently. Andy Jassy made comments about scaling Anthropic and the use of Tranium chips and Tranium 2 chips into AWS locations,
Oh,
because
here
they're
you
building
go.
a brand new data center, I believe. I forget what it's called. Oh man, it's on my tongue. Do you guys happen to remember?
I don't, but I found expecting significant reduction in share count dilution in 2025 and 2026. If this doesn't tell you that they listen to investors, then I don't know what would.
Yeah, it's quite
So
impressive.
there's your total dilution in 2024. Massive, way too much. And then dropped it to 4 to 6%. And then they're expected to drop it to 3 to 4% in 2026.
Yeah, it's quite impressive. It's quite impressive.
That's
Now, my
solid.
question is, and I'm not totally sure yet if those numbers that are presented on screen factor in Marigold merger or not. Because if you look at the rest of their guidance and their
Yeah.
numbers, it says excludes Marigold. So I don't know. It's going to be hard to tell. Maybe
Yeah.
on the call we could get some more information about that. That's something I'm going to be listening for. And I said that before we got these earnings. Pay attention to what David says specifically about Marigold merger and the stock-based compensation that follows.
The call might be on now.
Yeah, you want to pull that up?
Yeah. Let's see.
All right, well, Ronnie pulls that up, guys. I'm just going to reference this one more time. I mentioned it already, but the 4 core headwinds that Zeta faces right now. And as each one of these headwinds falls, the stock will uplift following these headwinds collapsing. One, that SaaS narrative, right? That AI is a killer to SaaS. As that starts to deteriorate, less downward pressure on that stock will be inflicted, and you'll start to see Zeta kind of pop. Another one, net profitability. So now, again, we talked about Q4, maybe Q1 2026.
600 attendees. Customer feedback was overwhelmingly positive, with many attendees commenting that it was one of the best events they have ever attended. Our goal is to close over $100 million in incremental business coming out of Zeta Live. At Zeta Live, we launched Athena, our next step in leading the AI revolution in marketing. Athena is our AI conversational super intelligent agent that becomes the intelligent operating system for our clients' businesses and ultimately for their lives. Athena marks a major breakthrough in human AI collaboration, removing the friction between the human and artificial intelligence and acting as a real-time, voice-activated command center for the Zeta marketing platform. One workspace to plan, execute, analyze, and optimize in plain spoken English. AI is the new UI, and Athena proves it. You speak your objectives, it builds the experience, launches the program, and delivers insights on one screen, making it easier to adopt more channels, more use cases, and ultimately drive greater ROI and spend on Zeta's platform. The business impact of using Zeta is already proven. Independent analysis shows Zeta stands up 50% faster than our peers and delivers a 6-to-1 return on investment. And with Athena making the platform radically easier and more intuitive, we believe these numbers will only get stronger. This is how AI becomes a habit, not a headline. Adoption scales, usage deepens, and the platform becomes harder to leave. We believe Zeta is uniquely positioned to develop Athena for 3 key reasons. First, data advantage. Our Zeta Data Cloud gives Athena rich, real-time signals for personalization and prediction that generic AI just cannot match. Second, native integration. Athena is embedded in the Zeta marketing platform, connecting answers to actions and insights to activation and measurement. Unlike our competitors who have legacy tech debt and cannot natively embed AI into their marketing clouds. Third, AI track record. AI is foundational to what we do at Zeta. We have natively built AI into our platform since 2017, and we believe this AI leadership is the reason we are winning today. At Zeta, artificial intelligence is foundational to our business, not an add-on like our competitors are building. The reception from customers, prospects, and partners has been incredible. If you did not attend the standing room only Athena demo at Zeta Live, I encourage you to watch it in the investor relations section of Zeta's website. It is truly game-changing. Athena is in internal beta now, and we expect it to be in client beta by the end of Q4 and fully production ready by the end of the first quarter of 2026. One Zeta is a key growth engine for us and a growth flywheel for our customers as they consolidate more data and use cases into the Zeta marketing platform. Customers who adopt 2 or more use cases generate greater than 3 times the annual revenue of a single use case customer, have our highest NPS score, and see the highest return on marketing spend. We have accelerated this focus under Ed C., our Chief Growth Officer, and the results are meaningful. For example, a leading big box retailer consolidated acquire, grow, and retain onto the ZMP at the start of our relationship. That agreement was greater than 3.5 times the size of a standard deal with similarly sized enterprises. Second, one of the fastest growing specialty retailers started with the retain use case and recently added a grow use case. As a result, the customer is expected to spend over $2 million with us in the fourth quarter, compared to only $700,000 in the first quarter, a 3-fold increase, and we expect this customer to continue to grow.
Bitcoin broke $100,000.
We expect the strong pipeline generated from Zeta Live, combined with the acquisition of Marigold's enterprise software business, which includes over 100 enterprises, 20 of the top 100 advertisers in North America, and more than 40 Fortune 500 companies who are all currently only on one use case, will further accelerate our One Zeta momentum into 2026 and beyond. I'll close with an update on our agreement to acquire Marigold's enterprise software business. We remain on track to complete the acquisition by the end of the year. After spending the past several weeks getting to know the business and the team better during the close process, I am even more enthusiastic about the opportunity this acquisition represents. Strategically, the data that we pick up, including the loyalty program, will be game-changing to training our proprietary algorithms, including our Athena, Answers, and generative engine optimization products, and widens our data cloud moat. We hosted several of their employees and customers at Zeta Live, and the 1 + 1 = 4 opportunity is more clear than ever. Great numbers are the output. The inputs are great execution, products, and people. The reason we are growing at an accelerated pace is simple. We have superior artificial intelligence and data to our competitors that we started developing 8 years ago, not 8 months ago. Our consistent execution over the past 17 quarters as a public company is a credit to our artificial intelligence, our people, and our data. Quarter after quarter, we have raised the bar. As always, I would like to sincerely thank our customers, our partners, Team Zeta, and all of our shareholders for the ongoing support of our vision. Now let me turn it over to Chris to discuss our results in greater detail. Chris?
Thank you, David, and good afternoon, everyone. The theme of our Investor Day in October was durable, predictable, and profitable growth, and our third quarter results are a perfect illustration of this. Our revenue growth, excluding political and live intent, accelerated to 28% in Q3 from 27% in Q2 and 26% in Q1, showing the durability of our growth. Our third quarter results once again exceeded our guidance for both revenue and adjusted EBITDA, highlighting the predictability of our growth. And we achieved the highest free cash flow margin in our history, achieving the rule of 40 on a free cash flow margin basis, demonstrating the profitability of our growth. With that, let's dive into the details of the quarter. In Q3, we delivered revenue of $337 million, up 26% year over year, or 28% when excluding the contribution from live intent and political candidate revenue in the year-ago period. We exceeded the midpoint of our guidance by $9 million, or 3 percentage points higher than our forecast, solidly within the 2 to 5 points of cushion we typically leave ourselves. Total scaled customer count grew to 572, up 20% year over year, and an addition of 5 customers sequentially. We ended the quarter with 180 super scaled customers, up 25% year over year, an addition of 12 customers sequentially. The strong super scaled customer additions were broad-based across industry verticals and driven by cross-sell of live intent customers and our One Zeta initiative. Scaled customer quarterly ARPU of $579,000 increased 4% year over year, or 13% when adjusting for political candidate revenue. Super scaled customer quarterly ARPU of $1.6 million was up 1% year over year, or 12% excluding prior year political candidate revenue. From an industry perspective, 7 of our top 10 verticals in the quarter grew faster than 20% year over year on a trailing 12-month basis, an improvement from 6 in the first and second quarters. The additional 20% plus growth industry was telecom, where we have had multiple significant wins over the past year and has been a focus of ours this year. It's also worth noting growth in consumer discretionary verticals like retail, travel and hospitality, and automotive remained strong in the quarter. And finally, all 3 of the non-20% growth industries were up year over year, between 7 and 17%. Our direct mix in the third quarter was 75%, consistent with the second quarter and an increase from 70% in the year-ago quarter, demonstrating continued success of our agency direct channel adoption. Our GAAP cost of revenue in the quarter was 39.5%, a 13 basis point increase year over year and 160 basis points sequentially. The increase in cost of revenue was driven by strong sequential and year-over-year growth in display and video, channels where we continue to see customers investing and which remain highly effective channels for customer acquisition and growth. In the third quarter, we generated $78.1 million of adjusted EBITDA at a margin of 23.2%, 320 basis points higher year over year, and $7.4 million better than the midpoint of our guidance. This marks the 19th quarter of expanding adjusted EBITDA margins year over year. Our GAAP net loss for the third quarter was $3.6 million, an improvement from a loss of $17.4 million in the third quarter of 2024. There were $6.5 million of acquisition-related expenses in the third quarter, which, absent these costs, we would have been GAAP profitable. Third quarter net cash provided by operating activities was $57.9 million, up 68% year over year, with free cash flow of $47.1 million, up 83% year over year, and representing a margin of 14%. This represents a free cash flow conversion of 60%, a significant improvement from 48% in the third quarter of 2024 and 57% in the second quarter of 2025. This also includes a roughly 18-point working capital headwind driven by longer agency payment cycles. The improvement in both adjusted EBITDA margin and free cash flow conversion in the third quarter exhibit the strong operating leverage of our model and put us firmly on track to achieve our Investor Day targets of a 30% plus adjusted EBITDA margin and greater than 70% free cash flow conversion in 2030. During the third quarter, we repurchased 1.7 million shares for $28 million and have repurchased 6 million shares for $85 million year to date. We also continue to make significant progress in reducing dilution and stock-based compensation expense. Just like the second quarter, in the third quarter, we had zero net dilution, and year to date, our dilution is 1.6% as of September 30th. We remain on track to achieve both our 4 to 6% normal course dilution target in 2025 and our $190 million equity compensation expense target, even when factoring in the equity we anticipate issuing for the Marigold acquisition. Before diving into our updated fourth quarter and 2025 guidance,
there you go, Wealth. They just answered your
question. I said
question
on the recent Marigold acquisition call regarding forward-looking estimates. Given there could be variability in the close date, which we continue to anticipate will happen in the fourth quarter of 2025, we have not included any Marigold-related contributions in our 2025 guidance and continue to guide analysts to not yet include Marigold in their 2025 or 2026 estimates until the transaction closes. Upon closing, we will provide guidance on Marigold's contribution for 2025 and 2026. We want to make sure that consensus estimates do not become a mixed bag of organic and acquisition-related revenue. As we have done with prior acquisitions, we plan to clearly break out the organic versus acquired revenue for the first year post-transaction upon announcement of closing. With that in mind, we're raising fourth quarter and full-year revenue, adjusted EBITDA, and free cash flow guidance. Details can be found starting on slide 16 of our earnings supplemental. For the full year 2025, we are increasing the midpoint of our revenue guidance by $11 million to $1.275 billion, representing a 26% year-over-year growth when excluding political and LiveIntent, which is 5 points higher than our starting point for the year at 21%. For the fourth quarter, we now expect revenue of $364.5 million at the midpoint, $2 million higher than our previous guidance and representing year-over-year growth of 16% or 23% when excluding political candidate and LiveIntent revenue, which is consistent with our Zeta 2028 plan to grow 20% or greater organically. For adjusted EBITDA, we're increasing the midpoint of our 2025 guidance to $273.7 million, up $9 million from our prior guidance and representing a year-over-year increase of 42% at a margin of 21.5%, an improvement of 230 basis points over 2024. For the fourth quarter of 2025, we now expect adjusted EBITDA of $90 million at the midpoint, up from our previous expectation of $88.4 million and representing growth of 28% at a margin of 24.7%. We are also increasing the midpoint of our 2025 free cash flow guidance to $157.4 million, up $15 million from the midpoint of our previous guidance, and representing year-over-year growth of 71% and a conversion of 57% of adjusted EBITDA. This conversion is up 10 points from 2024. For context, since our initial 2025 guidance back in February, we have increased revenue by $35 million and free cash flow by $28 million. Now let me transition to looking beyond 2025 and setting our initial organic guidance for 2026. While providing out-year guidance in Q3 is not intended to become standard practice, we're doing so this year because we want to establish a clean organic baseline for 2026 before Marigold is incorporated into our guidance. At our recent Investor Day, we spent time demonstrating our track record of 5 straight years of at least 20% revenue growth and free cash flow margin expansion. The punchline is, we see another year ahead of us with each at substantially higher scale. In terms of revenue, we're guiding 2026 to be $1.54 billion, or 21% growth on 2025 guidance of $1.275 billion. Importantly, this is an organic-only view and does not include Marigold. Our guidance assumes $15 million of political candidate revenue, which we would expect to evolve and is 2 times what the midterms were in 2022. We expect $354 million of adjusted EBITDA in 2026, or a 23% margin, up 150 basis points year to year. We see an initial view of 59% free cash flow conversion, yielding $209 million in free cash flow at a margin of 14%. And lastly, we continue to plan for a guidance model with 2% to 5% top-line buffer. From a seasonality perspective, we expect revenue in the first quarter to be $314.5 million, up 19% year to year, and accounting for roughly the same percentage of full-year revenue in the first quarter as 2025, and with an adjusted EBITDA margin of 17.8%. I'll conclude where I began. Our third quarter results, updated 2025 guidance, and initial outlook for 2026 underscore the durability, predictability, and profitability of our growth and reflect the confidence and momentum we have in the business. Now, let me hand the call back over to the operator for David and myself to take your questions. Operator?
Thank you. We will now be conducting a question and answer session. If you would like to ask a question, please press star 1 on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star 2 if you'd like to remove your question from the queue. We ask to please limit to 1 question and 1 follow-up. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment while we pull for questions. Our first question comes from the line of Arjun Bhatia with William Blair & Company.
Perfect. Thank you so much. And congrats on another great quarter, guys. Very nicely done. One question for you, David, just at a high level, I'm curious, like, as you look at the next kind of pocket of spend that's out there, I imagine a lot of it's going to come from media budgets. How do you think kind of Zeta's ROI or ROAS compares to that of the walled gardens? Are you hearing more customers come to you and say you're getting to parity? Are you already there? Because, you know, how do you go after that kind of large pool of budget dollars on spend? Thank you.
Well, thank you, Arjun. I'm obviously very proud of the team for the quarter. Let me start by saying that if you look at our collective clients, you've got 572 clients that spend over $100 billion a year in marketing today. If you look at the global marketing spend, it's about 75% media and about 25%, CRM-esque revenues. When we look at the breakdown of those two, we continue to be substantially more profitable than anybody else in the media space. In fact, a number of our clients use our platform, which allows our data to inform the way they market into the walled gardens today and we already partner with most all of the walled garden. So when you think about it, every dollar that is spent through the Zeta marketing platform returns a 6x return in revenue to our clients. That puts us on par with pretty much any walled garden. And what we're starting to see in a post-Gemini and post-OpenAI world, marketers are looking for new methodologies to create customers and maintain the customers they have. It's been challenging as the vast majority of the questions that are now asked on the Google platform, and certainly all that are asked on the OpenAI platform, ChatGPT, are answered on platform. So what used to be sent to our clients or to other publishers is now being consumed there. So clients are very much looking for new methodologies. We continue to be at the forefront of that. And I think that was a big part of what you saw us talk about at Zeta Live. And I think it's a big part of what you're seeing in the tailwind that we're currently experiencing.
All right, perfect. Very helpful. And then maybe one just on customer count, and we'll be nitpicking a little bit here, but it seems like in Q3, I think you added 5 scaled customers, and if I look at just the last 2 quarters, it's been hovering around 20. Is there anything sort of one-off that we need to consider there, just maybe agencies and us not having brand count visibility, and just how should we think about that metric sort of evolving over the next couple of quarters?
Yeah, I'm glad you asked, Arjun. 3 data points for you. First, on a year-over-year basis, that 20% growth in total scaled customer count is consistent with where we've been this year, and obviously north of our model of 4 to 5%. But to your point around sequentially, we had a really strong progression from scaled to super scaled customers. We increased by 12 sequentially, which is, if you look back at our history, certainly at the higher end. And then to your point around agencies, what's also being masked in the total scaled customer count is we were up 23 brands quarter to quarter. So as we continue to have success scaling within and adding new agencies, that doesn't necessarily add to scaled customer count, but in this case, it certainly translates to higher brand expansion. So we were really happy with the scaled customer count expansion this quarter.
All right, makes sense. Thank you.
Our next question comes from the line of Elizabeth Porter with Morgan Stanley. Please go ahead.
Great. Thank you so much for the question. I wanted to follow up, David, on your target for the 100 million incremental business after Zeta Live. So could you provide some context around how that target compares to what you've achieved in prior years, and how do you characterize the momentum coming out of Zeta Live relative to prior years? And then just lastly, how should we think about the conversion timeline from that event into bookings and revenue, and is that already included in fiscal 26 guidance? Thank you.
Thank you, Elizabeth. So first of all, last year, we closed about $57 million in business coming out of Zeta Live, which I think is one of the reasons we were able to grow 500 basis points greater through the year than we gave original guidance for thus far. This year, we're trying to get that to 100 million. I would tell you that as of today, the pipeline is already full enough to get us to that number, and we might see even more meaningful numbers than that. So as you know, we try to be consistent with our beat and raise methodology. We don't usually give guidance for the next year at the end of the third quarter. We felt because of the Marigold deal, it was important to make it clear that we were going to grow organically 20% again into next year from a top line perspective. I do think that Zeta Live will be a part of that, but I also think it's a part of the buffer that we continue to leave ourselves where we think we can continue to do better than that. To answer the momentum question, I would tell you my biggest challenge today, Elizabeth, is how do I top Zeta Live next year? It was just so incredibly well received. We had multiple clients just going crazy for Athena, and I just continue to see the most momentum I've ever seen coming out of any event we have ever hosted ever. It's a very exciting time for Zeta right now.
Great. And then just as a quick follow-up, on the live intent piece, understanding it's a smaller portion of the business, but it looked like it was a little bit weaker in Q3 and in Q4 guidance. So I'm wondering if there's any trends to kind of call out there on how that integration is going. Thank you.
Yeah, thanks, Elizabeth. I'll take that. Now, look, in short, we're really happy with how Live Intent is performing. We are accruing at 100% of their earnout. I think if we were to do things over again, you remember we set that initial guidance skew for every quarter of 2025 about a month after we owned the asset. We've learned a lot since. I think we're also realizing a substantial amount of new product synergies that is flowing, organically to the business. But overall, couldn't be happier with how the integration has gone and the execution of the team.
And what you're not seeing in the numbers is all of the cross sales from Zeta clients into their products and their products into ours. So I would tell you, Elizabeth, we think the Live Intent deal was a grand slam home run, and we're looking forward to having a similar experience with Marigold.
Great. Sounds good. Thank you.
Our next question comes from the line of Matt Swanson with RB.
Yeah, great. Thank you guys for taking my questions. David, we've seen the compounding value from an ARPU perspective when customers take multiple products. You talked about Athena and AI being the new UI. Could you just talk a little bit about how maybe that will help with the cross-sell and for people to, see the full value of your platform?
So thank you, Matt. I would tell you that I think Athena will be amongst the single biggest drivers to the One Zeta methodology we've ever had. To point out, it is, of course, fully voice activated and fully conversational. So any client by the end of the first quarter should have this fully embedded into their platform. Not only will they be able to work through the existing use case they have, Athena will already be programmed to help them with secondary use case expansion from production level launch. By way of example, if a client is using us actively for acquisition, they'll literally be able to say to Athena, tell me which of my clients are most likely to churn and how do you recommend that we save them? That removal of the friction between the human and the platform is going to allow, I think, for an accelerated growth of One Zeta.
One point where that, Matt, shows up also in the metrics is one of the areas that as we were preparing post-close that stood out to me is not only did each of our use cases grow double digits year over year, which has been consistent, but our 2 or more use case count grew over 100% year over year. So we're going into capabilities like Athena with really interesting go-to-market momentum.
Yeah, and once again, with 100 global enterprises in Marigold that are all on one use case, we see that as a very unique opportunity for the specialty team we've set up under Ed C. to get in there and focus on it. But I think that the integration and production capabilities of Athena are going to be really an accelerant to platform utilization.
That's really helpful. And then I'm sure the pipeline has a lot to do with this, but David, you mentioned that the 26 guide was, a quarter early. So Chris, could you just kind of talk us through being one of the first people to give us an outlook into 2026? Just what's kind of building all the confidence and the visibility that you have?
Yeah, we talked about at Investor Day, Matt, you'll recall that, so much of our installed base not only has been with us, 3+ years, almost 60%, 5 or more years, but there's now a demonstrated history of their, on average, expanding their spend with us 15 points a year. So, by starting our guide at 21% year over year, which by the way is consistent with really the last 2 years of where we started our guidance, we feel like, we've left even some conservatism there. The pipeline says a lot. And then, with more and more of our revenue under the curve from really strong signings throughout the year, it felt like today was the right time. Again, wanted to be clean with our organic baseline before we added Marigold. And, I wouldn't want to overlook the really strong addition, not just to revenue, but how much of that revenue for 2026 out of the gate is flowing towards increasing adjusted EBITDA and free cash flow. In fact, this year, from our initial guide of revenue, which was around 21%, so we've obviously, added to that since, but that translates to $35 million of revenue and $28 million of free cash flow that's been added to the guide since the beginning of the year as well.
Thank you.
Our next question comes from the line of DJ Hynes with Canaccord Genuity. Please go ahead.
Hey, thank you guys. Congrats on the really nice quarter here. David, Chris, I want to ask how you're thinking about sales and marketing investment and capacity build out there. I mean, obviously the operating leverage is great to see, but sales and marketing actually went down sequentially. And you shared some really powerful pipeline statistics around the growth there and the strength coming out of Zeta Live. So I'm wondering how you're thinking about whether it's time to lean in on growth. I mean, obviously, I guess you're going to get some sales reps with Marigold, but any thoughts there as you kind of plan for 2026 would be helpful.
Yeah, I mean, it went down a little bit by accident. We didn't mean it to. Quite frankly, we're trying to hire every great salesperson we can possibly get, DJ. The challenge is that our existing sales reps have been so incredibly productive that we've been able to continue to grow at a much faster pace than we expected to, while simultaneously trying to find more salespeople. We will pick up an incredible sales team with Marigold, both in the United States and Europe and EMEA. So feels like we're sort of very well positioned for where we want to go. Although, once again, we did grow 28% top line, 43% EBITDA line. I'm sorry, 46%. Don't want to, screw us out of that last 3%, but 46% growth on EBITDA and 83% free cash flow growth, while simultaneously, DJ, making some of the largest investments we have ever made into our artificial intelligence and innovation. So feeling very good about where we are organizationally.
You'll see a pretty material tick up 3Q to 4Q with Zeta Live occurring in October versus September like last year.
Yeah. Okay, makes sense. And then, Chris, while I have you, maybe can you talk about gross margins in the quarter? I mean, direct revenue mix held pretty stable at that 75%. I saw a little bit of degradation in gross margin. Just anything we should be thinking about there as we model the numbers going forward?
Yeah, mix was up nicely year over year, but to your point, it was stayed at that higher end of our range, 75% quarter to quarter. What we wrestle with on occasion is mix within the mix. And frankly, this quarter we had really strong display video channel usage. That display video channel usage is lower than what we average on our total direct revenue mix profile. But to give you a sense of just how much channel usage we're seeing, our greater than 4 cohort, so those scaled customers using 4 or more channels, was up 44% year over year, and our greater than 5 or more channels was up over 60% year to year. So mix within the mix, but consistent with our model, our long-term model, that each year we want to get between 100 basis points and 300 basis points of efficiency on the cost of revenue line.
Yep, makes sense. Okay, great. Thank you, guys.
Our next question comes from the line of Clark Wright with.
Awesome. Thank you. It was great to see a strong quarter of organic growth. I was wondering if you could talk a little bit more about the contributions from the agency. You talked about 23 brands being added. How should we think about the growth of the agency business and independent agencies relative to the direct enterprise relationships as we head into 2026?
Yeah, I mean, we break out our business in a lot of different ways and give you a lot of metrics. One of them, we're going to keep to is, keep the disaggregation of revenue down to direct and integrated. But what I will point to is, as a proxy for how healthy our agencies are growing, you would see the direct mix, was up over 30% on a year-over-year revenue growth basis, and then mix within the agencies. Let me just look at my notes here. Was up pretty substantially as well from a direct perspective. Let me just get the exact data point here for you. Matt, if you have it. Let's say agency direct mix was up from 52% direct to almost 60% this quarter.
I mean, direct to enterprise. Yeah, I'm sorry, Clark. I was just going to say, direct to enterprise continues to be the vast majority of our business, and I think will be for many years to come. but we love our agency clients, and we continue to expand with them very nicely. So it's been a really good blend to have both.
Awesome. Thank you. Appreciate that.
Our next question comes from the line of Jason Kreyer.
All right, great. Thank you, guys. So first on Athena, when you think about your 572 scaled customers, are there specific groups or segments of that where you think Athena resonates better than others?
So, Jason, I would start by saying I think our direct enterprise clients will probably adopt it in a more meaningful way first, which is not to say we don't think it really plays very well with the agency clients. From a vertical perspective, I don't really think it's going to be that differentiated. I think, if you have not seen the demo yet, which was standing room only, I say standing room only, there were people sitting on the floor who physically asked me to move so they could see the demo. We have a recording of it on our investor relations site. But I would tell you that when you put that type of power in the hands of a client, they're going to really adopt it very, very quickly. And we're excited about that.
Thank you. And just going back to the momentum topic, at the Investor Day, you had talked about 80% faster onboarding is some operational streamlining you've been doing. So, you just hosted Zeta Live, biggest event for building the pipeline. I'm just curious, is there a scenario where that pipeline of potentially 100 million can transition to revenue at a faster pace than we've seen in the past?
Let me start by saying our goal is to close 100 million in business, not just get the pipeline to 100 million, Jason. So we're on the same page. When you look at the fact that we've given guidance early to next year, we've now raised our, the fourth quarter this year. It's our 17th quarter of raising in a row. We feel like we've got the wind at our back, or we wouldn't be in a position to do both of those things. So I think that our confidence level is very, very high based on where the record pipeline is, what's coming out of Zeta Live. And yes, we are closing deals faster than we have in the past, and we are onboarding them substantially faster than we have in the past by automation and AI internally.
Great. Thanks, guys.
Our next question comes from the line of Terry Tillman with Truist.
Yeah, thanks, David, Chris, Matt, and Madison for taking my questions. The first question is, I was just hoping to double click on the replacement cycle opportunity. I think there was a stat that was provided at the Analyst Day about the last couple of quarters, the RFP activity had been up quite a bit. And I don't know if that's independent of the Zeta Live and the pipeline that you built out of that, but just maybe you could comment a little bit more around where we are in this replacement cycle opportunity, and maybe Athena helps with that. And kind of related to that, and hopefully this doesn't become a 5-part question, is like maybe there's pricing and packaging and other things you could drive to kind of minimize the inertia for those folks to move to your platform. And then I had a follow-up.
Yeah, so let me start by saying that the replacement cycle continues to be at full scale, and we are not just seeing more RFPs than our company's history. We are seeing the largest RFPs we have ever seen. And if you look at the legacy marketing clouds, the guys like Salesforce, Oracle, Adobe, one of them is leaving the industry. The other two are legacy. They're great companies with legacy technology. We are the next generation of marketing cloud, and we're really focused on how do we continue to win in what is an even faster accelerating replacement cycle. As it relates to Zeta Live, we went in with a record pipeline. We came out with a meaningfully larger record pipeline. It's just right now we are firing on 11 of 12 cylinders. I don't say 12 of 12 because I don't want to jinx us, but we're feeling very, very good about it.
That's great to hear. And I guess I won't ask for more cylinders past 12. Maybe that's for another conversation. But in terms of the independents, I think you all had 3 last quarter. I was impressed at the Analyst Day. One of your folks that was on stage was an independent, and it was pretty impressive. Their kind of passion for the platform. Maybe you could just give us an update on the independent side in terms of agencies. Thank you.
Yeah, so it's growing very rapidly. And, when you look at the different agencies that we're now platforming, even though we call them independent agencies, each one of them is representing between, $1 and $2+ billion a year in marketing revenue. So very excited about what's happening there. Terry, we've built out a sales force that's now solely focusing on independent agencies, and they are really, really rocking. I would tell you, we had, I can't give you the count, but so many independent agencies attended Zeta Live. We had a separate breakout to spend time with them, and it seems to be going very, very well.
Okay. Our next question comes from the line of Gabriela Borges with Goldman.
Hey, good afternoon. Thank you. David, my question is on Athena and more specifically on the process for implementation and deployment within customer environments.
Yeah. So, Gabrielle, I don't know if I lost you. I'm sorry, I lost you for a second there. I heard the Athena, and then you got into deployment?
Yes, the process of deployment and the learning curve on deterministic versus non-deterministic outcomes when you work with customers to deploy Athena.
So, first of all, great question as usual. All of our actions at Zeta are deterministic. So if you think about the data cloud, you've got the 242 million deterministic individuals in the United States, over 550 million globally. Athena is going to be built right into the Zeta marketing platform. So literally, anybody who's using the ZMP, which, as you know, has a common user interface for setup and a common user interface for reporting, will be able to use Athena seamlessly to activate and learn. It's almost like a data scientist and then an execution capability in one voice-enabled conversational platform. So everything that Athena does will be fully deterministic and will allow for deterministic attribution capabilities.
Very good. Thank you.
Our next question comes from the line of Richard Baldry with Roth Capital.
Thanks. Can you talk about sort of the architecture around Athena? And what I'm really thinking about is how easy or challenging would it be to extend that to cover new platforms? Obviously, something like Marigold would be, a place to look at.
Yeah. So, I mean, Athena's architecture is fully internally built. We are partnering with OpenAI as it relates to the voice interface, and we're excited about that. As it relates to what we can layer it on top of, we can easily layer it on top of any platform that has an OpenAI API. And when you think about where we're trying to go long term, yes, Athena is native to the application layer at the Zeta marketing platform, but as we integrate other platforms, it can easily be layered on top initially through an API integration. And then as we fully integrate them into the platform long term, it'll become native to their application layer as well.
So last few for me. Does having Athena make you likely to be more acquisitive, maybe of tuck-ins, because you can bring it under that umbrella kind of easier? And then maybe for Chris, when you think long-term or even short-term about the buybacks as a % of free cash flow, where's your thinking lately on that? Thanks.
So as it relates to, being acquisitive, as you've heard me joke, Rich, we've been in business now for 17 years. We've bought 17 companies. It's highly probable there'll be an 18th at some point. I don't know if Athena makes us more acquisitive, but it certainly becomes a bridge into anything we do going forward. And as we think about today being the #1 marketing cloud using artificial intelligence and data native to the application layer, Athena gives us the opportunity to expand and increase our TAM and our addressable market by moving into other business intelligence and other opportunities. Chris? Yep. As it relates to the buyback, Chris was sort of jumping on something for the second. We continue to focus on using greater than half of our free cash flow for retiring shares and repurchasing shares. Quite frankly, the only reason we didn't buy more over the last quarter was because once we signed the agreement to do Marigold, before we announced it, we were in internal quiet period. We weren't able to buy stock back. So I believe we were in the mid-70s as a percentage of free cash flow for share repurchasing year to date. I could see us continuing at those rates.
We've done about 85 year to date. We have a lot of dry powder in the next 200 program.
Sounds good. Thanks, and congrats on a great quarter.
Thanks, Rich.
Our next question comes from the line of Zach Cummins with B. Riley Securities.
Yeah. Hi, good afternoon. Thanks for taking my questions, David and Chris, and congrats on a strong quarter. David, I thought it was notable call out that you've seen some strong momentum in the telecom vertical. So just curious, what's going so well on that front in terms of building that momentum with telecom customers? And is a lot of that success really coming as displacement for other solutions with these major customers?
Yeah, I mean, you've got a lot of different telecom players out there really, really struggling for growth. And our platform allows them to grow at an accelerated pace at a lower cost than our competitors' platform. So what I would tell you, in almost all cases, we're displacing one of the major marketing clouds at this point. There's very few companies that are sort of doing this stuff internally. So you know, we're very excited about telecom. It's growing at an accelerated pace, and it's something we think will continue. Chris?
Yeah, a couple other points, I think, Zach, that are relevant on the industry verticals. As you know, we report the industry verticals on a trailing 12-month basis, and this was the first quarter that telecom made it to the over 20%, but it's actually been growing really strongly the last 2 quarters, so that was good to see. The 7 out of 10 growing over 20 is a marked improvement from what's traditionally been 6 for us, obviously telecom being that new entrant. But even those not growing at 20, we're growing between 7 and 17, which is great. But with so much focus in the investor community on what's happening in the macro, I think it's also worth highlighting that verticals that we've seen to be the most consumer discretionary, retail, travel and hospitality, even automotive, have continued at their very strong growth rates.
What we're seeing is even when there's difficult times out there, clients are moving to us at an accelerated pace because of our substantially better return on investment than most of our competitors.
Understood. And follow-up for Chris, just around the free cash flow conversion. It's nice to see the strong execution here in Q3, even despite the working capital headwinds. As we think about modeling out into future years, do you assume those working capital headwinds regarding collections with agencies will start to ease, or how are you thinking about that as we move forward from here?
If you adjust, Zach, for the pure timing of the agency's longer payment cycles, we would have been, again, at 80% and better free cash flow conversion. And if I then go backwards to, or I should say forwards, to the Zeta 2030 conversion target of at least 70%, you could argue we've even built in for a continued headwind from the agencies and not needing that to be fully neutral for us to get to that at least 70%.
Understood. Well, thanks for taking my questions, and best of luck with the rest of the quarter.
Thanks, Zach.
Our next question comes from the line of Jackson Ader with KeyBanc.
Oh, great. Thanks for taking our questions, guys. First one is on the, I guess, visibility into 2026. David, you mentioned, normally we don't get this kind of forward guidance a quarter early, but I'm curious, is it more than just the pipeline? Do the large customers you're doing business with actually, do they have commitments that give you more confidence, or, that the spend level is going to go up in the future that might not have existed in years past?
Yes. Yeah, we're seeing much larger contracts from our larger clients, and it's giving us far more visibility and comfort in the numbers.
Right. So it's okay, pipeline bigger, but also, visibility also bigger.
Client, large, to be specific, Jackson, to be specific, large clients are giving us larger contracts than we've ever had before and far more visibility into our forward numbers than we've had in the past.
And tactically, Jackson, this time of year, frankly, August, September, we're in our kind of next year planning process anyway, not just internally, but with our customers. So even though historically, and what we would normally expect under, absent a Marigold type transaction, giving guidance in February, a lot of that work is effectively already done.
Got it. Okay. And then quick follow-up. You mentioned the political candidate revenue expectations for last year, but curious whether you have any initial expectations for advocacy and how that works, in the, call it like the off-cycle election years.
It's followed, Jackson, a similar pattern as candidate spend, meaning if you go back to the midterms in 2022, where we had political candidate revenue of around $7.5 million, this year we're planning for effectively double that. I would think along similar lines for advocacy from kind of midterm to midterm. The tricky part for that for us, and why I specifically said in the prepared remarks, I think this number will evolve, is those deals can come into the pipeline very rapidly, much faster, or I should say later in the process than what a typical enterprise or an agency deal would come in. So it tends to be something that happens on the quicker timeline for us. So hence why I think that number is going to continue to evolve.
Yeah. Okay. All right. Awesome. Thank you, guys.
Thank you, Jackson.
Our last question comes from the line of Koji Ikeda with Bank of America.
Yeah. Oh, hey guys. Thanks so much for taking the question. I wanted to ask a question on Marigold for 2026, and I know it hasn't closed yet, but really wanted to ask around, because you've had such success in the past with acquisitions. I think about acquisitions for you guys with like more around 1 + 1 = more than 2. And so, with your guys giving out a 26 guide out there, thank you very much for that. And previously, you've kind of given a guide for, I think, $190 million for Marigold for 2026. I mean, I guess where I'm going with this is that it sounds like just stacking 190 on the 1.54 billion guide for 2026 could be understating the opportunity.
How do you go after
with Marigold?
large pool?
Of course, I don't want to get over my skis here, but just given your track record with acquisitions, it doesn't seem
Thank you, Arjun.
like that's out of the realm.
I'm obviously very proud of the team. Yeah, so let me start by saying we do not want to have the guidance combined for the two yet. The reason we put the organic guidance out was because the last time we did this with Live Intent, half of the analysts added it, half did not, and it created a tremendous amount of confusion. So when we do close that deal, Koji, which we expect to do this year, we will 100% update what we believe it will do on top of the 1.54. And I just wanted to get that out there. Second, we started this year at a 21% guide, and we're already at 26%. So we've added 500 basis points from where we expected to be at the beginning of the year. As you know, we've known you now for a very long time. For 17 quarters in a row, we've beaten our guidance and raised our guidance. Our goal is to be sitting here at the end of next year and saying we've done that 22 times, right? So we are very good at M&A. We have our pillars. We believe that Marigold fits every one of our pillars, and we believe that it's going to create a really nice tailwind to the growth of the combined company, specifically around taking their 100 global enterprise clients and making them from one use case to multiple use cases. As you point out, we always want 1 + 1 = 4. When you look at moving from a single use case to multiple use cases around the One Zeta opportunity, those clients generate between 3 and 3.5 times more revenue than clients that are just using one use case. So I do think that the Marigold acquisition will lead to a really nice tailwind into next year, if that makes sense.
Yep, totally does. And looking forward to that press release on the closing of Marigold. Absolutely. And maybe just a follow up for you, David, I did want to, now that on the back of Zeta Live, I did want to ask how Zeta's brand image is evolving with your customer base. Maybe compare and contrast how customers are looking at Zeta today versus how they looked at you 3 years ago.
Well, I'm not even sure you could put the way they looked at us 3 years ago to today in the same conversation. It is so advanced, Coachy. What I would tell you is we started this journey, and 3 years ago, we were at Zeta Who, which really meant when we walked into a sales call, we would have to spend 50 minutes of the first hour explaining who we were and why we were in the room. Our goal was to get to why Zeta, meaning we know you're here, we know why you're here, why should we pick you over your competitors? The next evolution really is Zeta now. I need Zeta. How do I get you into my stack? And the final is must have Zeta. We're still a ways off from that. That's sort of like Microsoft. But what I would say is we are very solidly in the why Zeta. We get into the room, people know who we are. We are the advanced player in our space. We are looked at as cutting edge. We are looked at by marketers as a very important component of their tech stack, and they're really looking at us as a sort of game-changing company as it relates to AI data and their ability to deploy it organizationally.
Thanks so much.
Ladies and gentlemen, there are no additional questions at this time. Thank you for your participation. This does conclude today's teleconference. You may disconnect your lines and have a wonderful day.
All right. Wow. Wow. Wow.
Hey man, sorry. I had to I muted it and looked at my phone because I was on another app that tracked some of the text inflow so I could get some quotes while we were live. Man, I got so many quotes right now. This is unreal. No way he dropped an OpenAI partnership. That is unreal.
I know.
Unreal.
Only for the voice assistant, which
Yep.
I actually, you get the best of both worlds with that, in my opinion. You get the partnership with OpenAI, giving them that status, and it's great that they're talking about that right there at the end, getting that like, hey, we are Zeta Global Live. When we walk in a room, they know who we are now. Instead of a couple years ago, maybe even last year, they walked in a room and they're like, Zeta who? Getting that status with a partnership with OpenAI is massive, and especially as we've seen, and the stock popped obviously 2.5% right off that news. But I like that it's not overbearing, and it doesn't make Athena, right? It doesn't make Athena look like weaker. You know what I mean? Like Athena's their product, their AI that they've been working on for years and years and years. Not like some of these other companies that are just trying to spin up, these agentic AI, their own AI agents. Like they're trying to do it just right now. Zeta's been working on this for years, like they continue to say, right? So I love the fact that it doesn't overshadow Athena, but we still have a partnership with OpenAI. Amazing. Just for the voice.
I agree.
Just for the voice, which I'm like, okay, cool. I just care
Actually,
about them having a great platform.
That is a tactical decision too on management's behalf, right?
Oh,
they know what they're capable of. Yeah, man.
Phenomenal.
Like they know what they're capable of. They're very well prepared in order to develop a model like Athena using their own proprietary data set. And they talked about that, right? There's a little bit of a flywheel there. as more customers come in, more use cases, the better the product gets, the more solid their proprietary data lake becomes, right? Now, noting that they're not really good at voice models, and clearly OpenAI has put a lot of time and effort into their voice model, right? Along with Gemini and Grok, we can list a bunch of different LLMs out there, but that name recognition from OpenAI is huge. That is great. And that actually tells me that they're going to get a nice, refined, high quality product that they can use that voice interface with. So their clients are going to have this awesome experience, right? And something at the end of the day, and you mentioned this after going to Zeta Live, is that Zeta is just focused on high quality product, right? And this is something that kind of resonates throughout the entire company, is quality, and the theme of quality, which is awesome to see as a shareholder. Man, I'm so excited at the moment. This is great stuff.
This is our it's tough because and I'm sure you've had this as well. It's tough because we sit here and we pound the table on these valuations of these companies, whether it's Oscar, whether it's Zeta, whether it's Root, whether it's any of these other companies we cover. And we pound the table because we see what they're doing and we see the valuations based on conservative assumptions. And it gets muddled by the people that want gains now. And I made a post about this a couple weeks ago. The people that were invested, like myself, in Palantir or Tesla or Nvidia, these companies, or Robinhood, people don't realize that you have to go through the fire sometimes. You have to go through these periods. And I don't even think we've really been through the periods of Palantir shareholders and stuff, just to let everybody know. Palantir, Robinhood, Nvidia, all these shareholders, they went through a fierce bear market. Since we've been covering this company, we haven't gone through a bear market. We haven't plummeted over 50% in the stock price since I've been covering it. Probably since Wealthmatica has been covering it, right?
Yeah,
we
short
started
report hit
covering
us
it.
hard.
Yeah, but we started covering it after the big plummet from the lawsuit. You know what I mean?
Of course. Yep.
So it's like at this point, I started talking about this company around 15 or sub $15, and we're sitting around, what? $18.24 now. People just kind of get bored with the up and down and we're going, we're not going, we're going, we're not going. And I get it because people look at Palantir and look at the up and up and up and up and up and up and up. And people kind of lose track and lose sight of how that's not how the stock market works, and it's not how it's going to work for a lot of companies. You're typically going to build this structure along the way. You're going to go up and then you're going to come back, build a lower high or a higher low, higher high, higher low, higher high, higher low, and you're just going to build up structure as you go higher and higher and higher. But what really matters is just having that conviction in a company like people in Palantir did and Tesla did, and just staying true and being a long-term investor. I can't tell you when Zeta is going to be at $30 per share. I can't tell you if it'll ever be at $30 per share. But me personally, being invested in this company, understanding this company, and running the valuation models that I'm running, I don't see how my investments won't materialize very, very nicely in a big way to $30 plus per share, which I'm not even going to be thinking about selling really at $30 per share. If it got there tomorrow, then it's at fair value. You know what I mean? I put out these models and these snapshots, and people don't realize these are just this is just fair value. This is what I believe is fair value today.
Yeah, I agree. My fair value is $28.
28. Yeah.
Got some feedback here.
What's that?
We got feedback again from Sharon.
Man, every time I share this dang thing. Oh, it's because hold on. It's because the mic's on. It's all good. I won't share it. But basically, I just updated my snapshot with their new numbers, and I now have a discounted cash flow intrinsic value of $37 per share intrinsic value today based on the DCF, and that's a 50% margin of safety from where we are today. And their EPS fair value, remember, they're not net income positive yet. We're going based off EBITDA and net margins and where they could be once we get there. But we're looking at about $27 fair value, similar to what you were saying, $27 fair value based on EPS, which is a 33% margin of safety.
Yeah, that's impressive. That's impressive.
And we're sitting at 18 something. Like,
you see in the chat, Ajit just said he really liked how they were very close to net profitability. Well, there was a little comment that was made. And I believe it was, I'm trying to find my quote here in my Google Doc. I was just writing everything down. But I think it was Chris Greiner, the CFO. He mentioned that they had a acquisition expense that came in at 6.5 million. And without that acquisition expense, this quarter, Q3 2025, we would have been net profitable. Moving forward,
I must have missed that, because that is huge.
Yeah,
that
is
I must
very
have missed
huge.
that is massive.
Yep, here I got the quote. Gap quote. So yes, it was Chris Greiner during his CFO little commentary right after David had his opening. Quote: Gap net loss was 3.6 million. 6.5 million of acquisition related costs in Q3. Without these, Zeta would have been gap profitable in Q3 2025. Oh man, like, if that's not bullish going into Q4, I don't know what it is. That's absolutely phenomenal news right there.
Here's a couple of things I'll say. If the market wasn't down as much as it was today, I think Zeta would be sitting at 20% plus gain, 20% plus in after hours right now. I really do.
What's it at right
now? It's at 9.28%.
All right, we'll see market open tomorrow.
Yeah. If markets bounce back tomorrow, I think Zeta. I think once analysts really dig into what you just said, what we just brought up, that because of an acquisition, not because of like some other like business
like or something,
because of acquisition, which is only going to help them as a company, they would have been net income positive. That is massive.
Yeah,
we can just already say, like, let's say they were net income positive here, it would be up 20% plus. Because this would be their first net income positive quarter. And so once people dig into that, they're gonna see. Yeah.
All we need is a couple headlines that say OpenAI partnership with Zeta Global, which we know we were going to run tomorrow morning.
Oh yeah.
The market will pick up on that and people will just buy it because they see OpenAI. Not that I want that to happen, because I kind of think the whole OpenAI thing is getting a little bubbly. It's not giving me a great taste.
Yeah, 100%.
But it will make the stock run a little bit in the morning. So keeping that in mind. So running through some of my other quotes here that I captured. So I started rolling out with some of these during the call. I just started throwing them on X. One that was pretty eye-catching here, he said, this is David Steinberg, quote, every dollar that is spent through ZMP or Zeta marketing platform returns a 6x in return in revenue to our clients. That is, man, that's quite the statement. He said something like this before on CNBC, but it's great to hear it again.
I mean, like me and you were talking about, right? And I know you're making, I don't know if you already posted the thread or you're currently still making it. Definitely give it a look whenever Wealthmatica posts it. But and I just posted a video the other day and I basically said this, like I put like Palantir 2.0 in the thumbnail. And it was slightly clickbait, but it was also slightly true in what I believe. What other company have we heard time and time again? What other company CEO have we heard time and time again talk about exactly what Wealthmatica just said? Bringing value to the business customer. Saying, we will sell you this product and we're not just going to take your money for it. You're actually going to recoup 6 to 7 times the amount of money that you're paying us with our product. Who else consistently has said that? Oh, yeah. Palantir and Alex Karp has consistently said the value we return to our customers, our business customers, is tenfold. Now, Zeta is not tenfold, but 6-7-fold is pretty damn good. Okay. Like, I mean, what are we doing here? Right. So the comparisons are there, right? We're not going to sit here and say like Zeta's going to go on, Palantiring like Palantir's doing, right? But guys, like another point I want to make, is the market frothy? Yes, it is. But when you look at other companies like Zeta or Oscar or like a UNH or a Target or like some of the staples out there, like the staple companies, when you look out there, there's a lot of great deals out there. So even if these markets if they keep tanking, they keep getting hit, you have to realize what's really going to be bringing the markets down aren't companies like Zeta or Oscar or UNH. It's going to be the frothy companies. It's going to be the Quantum that's ran like crazy. It's going to be like Oklo that doesn't have like any revenue that ran like crazy. It's going to be Palantir where their valuation's super stretched. It's going to be Nvidia at all-time highs. You see what I'm saying here, right? And this is why I'm not really worried holding Zeta, especially after that earnings call. And I know Wealthmatica is not either. You sit there as an investor in a company like this and you say, go ahead, market, sell this thing down to $10. Sell it down to $10. I know that might sound scary to a lot of people, but you have to reshape your mind. Re-listen to that earnings call, re-look at the numbers, and then sit there and say, wow, if they did sell this down to $10, why wouldn't I buy more? Because nothing is changing from now to the next quarter. You see what I mean? Nothing's changing. The fundamentals are the fundamentals, the numbers are the numbers, and we just ran the valuation metrics, and I have a $27 to $37 fair value on this company with conservative assumptions. I gave it a 20 terminal free cash flow. A 20 terminal free cash flow. That's not even being generous, honestly. A 20 terminal free cash flow for this company when they're expected to continue to increase free cash flow margins, when they're going to continue to grow 20% every year.
Yeah, it's quite bullish. It's quite bullish, man.
Like 27 to 37 is conservative. That's what
Yeah.
they should be today.
Yeah.
And I'm telling you, the main reason pretty much is one, people just aren't opening their eyes to this company yet. They don't really know about it yet. I know in our space we know about it because we talk about it all the time, but we are in a vacuum right now. Okay. The big boys, the big dogs, they don't know about this company. They're going to very soon. Okay. They're going to very soon. Almost 11% up now on Zeta.
Yeah. Well, we got to keep in mind too, right? Like you're talking about big dogs. There is currently a 13.1% short float on Zeta, and that's surrounding the entire short report, the legal case,
That's
everything.
amazing.
When that's sorted, these shorts are going to be destroyed. This thing is just prepared to go upwards. It's unreal. And so I just want to touch on something, Ronnie, and I know people will scrutinize these comments that we've made here.
Yep.
And I just want to double down on it because I want to be clear. Palantir is a unicorn company. It's one of a kind. And we're not making the argument here that Zeta is like Palantir. They're literally completely different things. But what Ronnie is trying to say, and I'm actually going to make a thread about this for tomorrow, instead of posting it today, I'm just throwing up a bunch of quotes. But this one moment with Athena, and we talked about the Athena roadmap, and they talked about it on the call today. Athena for Zeta is the equivalent to that AIP moment for Palantir. We're not saying it is the same thing. It is definitely not. But that moment when Palantir released AIP and it became active and this became a product they started selling and using, and their whole mantra of selling outcomes to customers, that exact same concept applies here to Athena. What Athena is for Zeta was the exact same moment when Palantir released AIP. It fundamentally changed the company. And that roadmap was exponential. Like you saw that uptick in that growth, that same potential to fundamentally reshape Zeta exists today. And that mechanism is Athena. And management believes that themselves. This is a quote from David Steinberg right here from the call tonight. He said, quote, Athena will be amongst the single biggest drivers to the One Zeta methodology we have ever had in our company's history. Now, for you who don't know what One Zeta is, essentially it's a principle of integration. They want a client who can come in and they integrate the customer into a One Zeta ecosystem. So it's sort of just some internal lingo they use, but ultimately at the end of the day, Management fundamentally believes that Athena will change the entire fundamentals of the company, like how the company can scale. So this is the moment. This is just like a glimpse in time where you look at a company and you're like, wow, they're about to do something huge, really, really, really big that is going to change the trajectory forever. That is what Ronnie's trying to highlight. That's what I'm over here retweeting. I'm pressing that repost button. Like this is reality, man. This is reality.
Yeah, I mean, we've been pounding the table on this company for a while now. I don't know how else to say it. Like, at this point, you're either gonna believe what we're saying, you're gonna be an investor, or you're not. And to me, in wealth, I mean, it doesn't really matter to us. We're just trying to sit here and educate people on such a great company that people are just not opening their eyes to, and they're just not. They can't see past two things. They can't see past the lawsuit, which again, from David's mouth to my ears, he said frivolous lawsuit. And it's just going to take time to work itself out because it's the court systems in the US. If you don't live in the US, you need to understand the court systems in the US. It's a long grinding process, okay?
Yep.
Like if anybody was to sue anybody, it's gonna take time. It's gonna take time.
Yeah.
That's one. Two, these shares outstanding. Those are the two things that people are like, that company sucks. Shares outstanding keep growing. Lawsuit. Okay, we just talked about the lawsuit. If you actually look into the lawsuit, Wealthmatica has great coverage. I haven't covered the lawsuit that much besides saying it's just a BS lawsuit. But Wealthmatic has actually covered the lawsuit very, very in depth. So definitely check out his channel on X to get more information on that. So we already covered that. Basically, in short, it's just a BS lawsuit, guys. Even if they have to settle or something like that, they have insurance for it, and then it's like onward and upward. Do you know how many companies get sued all the time? Like Google just hit all-time highs, and they still have this investigation out by the freaking government. Like, come on, guys. Like it's like peanuts, okay? Second thing, the shares outstanding, guys, you can't say it anymore because the company is doing something about it. If the company wasn't doing something about it and they're going quarter over quarter over quarter where they keep accelerating the amount of shares they're just kicking out to everybody like candy on Halloween, then okay. But they've literally addressed it. They've peaked, and now they're actually bringing it down. And they actually, I'm sure you have some quotes, Wealthmatica. They actually were talking about how they could have bought back more shares this quarter, and they didn't. And they said they're the amount of shares that they're going to go into next quarter buying back in the quarters to come, they plan on buying back a lot. So how stupid is it going to look that all the people that are shouting and not investing in this company because shares outstanding, and then Zeta turns a corner to where they're now buying back way more shares than they're giving out, and then now they're buying back and they're buying down shares and they're growing 20% revenue. They're growing top line 20%. They're growing bottom line. Free cash flow margins are expanding. What then? Free cash flow margins at 14% for this quarter. If it's already if it went from 12%, which I had my model on, and it grew to 14%, and they just said it's going to grow again in 2026. What are we even talking about here, guys? People are missing it big time.
Yeah. Yeah, they bought back a lot of shares this quarter, and they could have bought back more, but I just ran the calculation. So the quote was so this came from the CFO, and he said here, I'm just finding my quote. There it is. During the quarter, Zeta repurchased 1.7 million shares for $28 million USD. So I ran the numbers that they bought. The strike price they bought at was $16.47 a share.
Give me that strike price. Give me that cost basis.
And that means this company understands the intrinsic value of their company. They know where they should be buying and where they maybe shouldn't be buying, right? They understand that this company at the moment is truly fundamentally undervalued, right?
I won't say, sorry to cut you off. I won't say exactly what David said to me because I don't want to get him in trouble or anything like that. But when when I told David, I told him straight up, I was like, your guys' company is severely undervalued on all my models. And he just had this giant cheesy grin on his face and just had this silly chuckle. Like, again, I'm not saying anything that he said, just this giant silly grin and just like, kind of giving the vibes of like, yeah, we fucking know. Like we know. We know. So again, like, because I know people are like, get all whatever about, he didn't talk about his stock price. He didn't talk about any of that. I'm just saying, like, I was like, your guys' company is severely undervalued, and he was just straight up like chuckling about it. Like, yeah.
Yeah, that's awesome. It's great to see that from a CEO. And yeah, please do not share exactly what he said. We don't want to get him in trouble.
No, definitely not. But yeah, what you were saying, guys, the best time for a company to be buying back his stocks when it's severely undervalued, like Zeta is doing right now. Like, yes, continue to attack your shares outstanding because your company is severely undervalued. If I was one of these quantum companies or even like a Palantir, I would not be buying back shares at all. At all. Why would you be buying back shares when your valuation is extremely stretched to the moon? You know what I mean? I could see buying back to like offset any shares outstanding that you do. That's fine, but like the markets ebb and flow. You are going to get extreme euphoria. You are going to get extreme depression in markets. It is constant. It doesn't matter what anybody says. Doesn't matter how bullish someone is or how bearish somebody is. You are always going to get these swings to extreme bullishness to extreme bearishness. Extreme bearishness was Tariff-Geddon, was the bear market of 2022. Extreme euphoria was COVID 2021, that bull market and how it ended with NFTs and all this craziness and meme coins. And you can argue right now, just the past like month or so, we've seen extreme euphoria or a lot of euphoria. Things will always ebb and flow. And again, where markets are at right now, I could definitely see markets take a 5, 10, 15% hit right now. I could see it because we've ran so much since April. I'm not saying that's what's going to happen. I'm just saying I could see it. And based off some of the indicators I have and what I'm seeing, it looks more possible than it doesn't. But again, we just go back to you look in your portfolio, what companies do you own? Do you own companies that you can sit there and say, wow, this thing like Zeta? I look at it, I'm just like, even after today, I'm like, wow, they just crushed earnings. They're guiding for 2026. What? They're guiding for 2026? Are you kidding me? In the third quarter? Who does that? They're literally raised guidance for next quarter, but they're also raising guidance for 2026 and putting out guidance. Like, what are we even doing?
Yeah,
what are we doing?
That's insane. You could hear the analysts were so like taken back by that. They're like,
yeah, there was not one bearish analyst. There wasn't one analyst that came on there that was trying to get a gotcha question or anything because they're all baffled. And how many earnings calls have you listened to, Wealth, where it's like there's always a couple analysts that are on there like digging at one specific number, like trying to get a gotcha. The most that they did was talk about, a slight deceleration in less than $1 million customers, which they easily answered that. And they said, okay, yeah, we quarter over quarter, we went down, but we expanded our bigger guys, our 1 million plus guys, we expanded them faster. And if you look year over year, we still did what we're normally doing, 4 to 8%.
Exactly.
So, okay.
It just translates to more premium customers, right? Higher quality, higher paying customers, right?
Yeah.
That's exactly.
Here's the thing. How many of those customers under 1 million, like, you don't know, it's one quarter. How many of those customers under 1 million said, damn, they got a good product here, I want to spend more, and they bumped up to the next tier, 1 million plus? You know what I mean? Like, you don't know. Exactly. So if we had more up here at 1 million plus and we had less down here, you just don't know. And I was at Zeta Global Live. Like, it wasn't just all hype, just only around Tom Brady and Serena Williams. Like, there was a lot of hype around what they were doing. When he said standing room only, when they were doing the Athena, like it was. He's not BSing. Like, it was standing room only. It was just as packed as it was whenever Tom Brady was in there and Serena Williams was in there. And that's a big deal. I couldn't believe we got the seats that we got. We were literally front row. I'm literally sitting there videotaping it like, this is awesome.
That's awesome, man. That's
So-
great. You know what? I want to go back to some more quotes here because something that I liked that they touched on, and some of the analysts had some questions pertaining to market share, TAM. What does competition look like? What does their growth look like? And they really try to paint a picture where Zeta is going and how does Zeta stand out. And this is what David Steinberg had to say. He said, quote, "We're displacing one of the major marketing clouds at this point." He continued on to say, "If you look at legacy marketing clouds like Salesforce, Oracle, and Adobe, one of them is leaving the industry. The other two are, well, legacy. Great companies with legacy technology. We are the next generation of marketing technology." So essentially what he's pointing at here is that they are growing so rapidly that people are catching on that their product is superior, that they're leaving legacy entities like Salesforce, Oracle, and Adobe. I'm actually
cheaper too.
Yeah, exactly. Cheaper price point and guaranteed returns. One of those three players is literally leaving the industry and they're displacing them. Zeta is literally displacing one of these major players. These are huge companies. And I'm going to put some research in to try to figure out exactly which one of these three. I'm leaning towards Oracle. Likely is the one that's probably leaving the industry.
I don't think it's Salesforce. That would shock me if it was
Yeah,
Salesforce.
I don't think it's Salesforce. But he did make it clear that these are legacy players, and it's true. It's true. Like these are legacy players, and Zeta is the only one who's coming out here with GEO as well. Generative engine optimization, which is awesome.
Patel said Oracle is leaving, and I probably believe him. He's been pretty spot on with a lot of his coverage on Zeta as well.
Yeah.
I did want to. Somebody asked me about running, like, where do we see this company going, like projections wise. I think that's a really valid point. Again, not giving any financial advice here, guys. Obviously, you have to do your own due diligence and everything, like anything, but we can talk about, kind of like I have my Excel spreadsheet pulled up here. We can kind of talk about where I have things modeled out at, like a range, right? Is the AI partnership true? Yeah, it's 100% true. We heard it straight from
That is
David
100% true. I have the quote.
100%
100%.
Isn't that sad? Not you did nothing wrong, drop, but that's so sad, man. Because like so many people like put out fake information that it's people like don't know anymore. Especially with, like AI videos, you just don't know anything anymore, kind of. But yeah, it's 100% true. It was a partnership about using their voice technology. But running the projections, so cool. $37 intrinsic value based on DCF model, $27 intrinsic value or fair value based on EPS model. So we're sitting about 30 to 50% margin of safety on this company, right? Now, if we were to extrapolate that out with this terminal fair value, and we're looking at everything, we're looking at a share price in 10 years' time based on free cash flow, we're looking at oh, okay. Yeah. We're looking at, around, I don't want to say $161 because that's a bit extreme. But if we did plug this in and extrapolate it out, we're looking at around, $150 10 years time, which would be an insane 24% average per year compounding annual growth rate. On EPS side of things, it's going to be a lot slower because this is a growth company, obviously. So on EPS side of things, we're looking around a $50 fair value in about, 10 years time. You there, Wealth? Did I lose you?
Yeah, sorry, I muted my mic. I didn't know if I was going to get some echo.
Okay, yeah, all good. So, looking at these two, DCF 161 in 10 years from now, that puts them at a, let's see, 161 divided by, let's call it 18, 9, Well, without looking at this, in 10 years' time, what would you like if just at the top of your head, 10 years' time, what do you think the market cap could be? Like conservative, just right off the top of your head, like give me a
Conservative,
number.
I'm gonna throw it around 20 bill.
20 billion? Okay, cool. So $161 would put this at a $36 billion market cap. So
10
again,
wow.
20 still puts them at, that puts them at a freaking what? 5x. 20 billion puts them at a 5x because they're currently like 4 billion market cap today. So
Yeah, you know what?
again,
It just takes a little bit for this thing to get a premium, honestly. That's all. A couple
yeah,
headwinds dissipate.
and this is
That's
only
it.
a 20 terminal fair value multiple. And again, they're growing 20%. And I have them doing 20% like they said next year in 2026, and then I have them dropping off to 18, 16, 18, reaccelerating to 20 in 2030, and then 17, 13, 15, 15.
It's impressive.
Guys, they're not acting like their top line's gonna like stop growing 20% plus per year anytime soon. I don't get that vibe from them at all.
And those are
So
conservative
again,
numbers, man.
these are being conservative, guys, and we're getting
Yeah.
$37.
And
And
keep in
again, they
mind,
just did 14%. And this is
keep in
saying that
mind,
they don't grow any more margin on free cash.
you're using that baseline right there, that you're driving those revenue numbers right there based off the knowledge you have from management's guide, right? Just forecasting a conservative number.
And then
Management
less.
guided, yeah, exactly. Management guided better numbers without
Yeah.
Marigold rolled into the price, right?
Yeah.
Rolled into the forecast. It's ridiculous. It's absolutely ridiculous what the potential of this company
Yeah.
has.
You could look at pretty much any metric. I mean, you're getting a 3.5 on current free cash flow yield. You're getting over a 4% on 12-month on forward free cash flow yield. You're sitting at about a 28 PE, a 26 forward PE. But again, like that's not like this isn't an EPS company. This isn't an EPS company. This is a growth company. Like they are stealing market share away from Salesforce and Oracle. Like they are becoming a beast, and they are $4 billion market cap, guys. They're tiny. They are tiny, and they are just guys. Just like think of this: they're a $4 billion market cap. Salesforce is a 200 and some billion dollar market cap. They have these giant grand parties, and they have like Matthew McConaughey doing their commercials about their Einstein product, which I think their Einstein product's crap. And I think like really with AI where it's at nowadays, I'm not bullish on agentic bots because I think a lot of companies are able to build agentic bots with AI nowadays. I don't think it's like something super difficult anymore. And it's something like agentic bots. I believe the better path is like AIP or something like Zeta with Athena.
Yeah, you need an ecosystem, right? You need an ecosystem. That's why I think Google's
Exactly.
well positioned for agentic
Yep.
technology. And I've mentioned this to you before, right? Is because they have a highway, that authentication highway that authenticates the identity of each individual across multiple websites, right? That's what gives them an edge. For Zeta, they have an ecosystem for marketing technology, right? That's called the ZMP, Zeta Marketing Platform. Within that ecosystem, you have an agentic tool set, which is Athena, that can drive tasks and automate literally everything end to end, so you don't have that human intervention anymore, right? So then you take out those sort of gut feelings of, oh, I feel this or I feel that aren't data-driven solutions, that aren't data-driven decisions, and you actually get the AI to make the decisions based on hard data, hard empirical data. That's the game-changing factor that Zeta delivers with Athena here. And that's what's going to push Zeta to that next level.
Yep. Two things. How about a 50 to $100 billion market cap? If they truly execute like crazy, I don't think they could get to 50 in 10 years. I think it'd be longer than that. But at the same time, if I were like going for like a home run, and like, man, they just executed and stole share away from like Oracle and Salesforce like crazy, I could see if you told me in 10 years time, like, yeah, Zeta is a $50 billion market cap, it's not something I would be like, that's preposterous. Like I can see it, but it had like the execution guys and everything has to be like crazy.
Exactly.
Again,
I agree. And they also have to go to
5 to 10x
different
though.
perspectives.
Yeah. 5 to 10x though, like for sure. Well said 20 billion. I think that's very conservative, honestly. I could see around 30. This is 37. But like what are we even talking about though? You know what I mean? Like 20 billion is a 5x from here in 10 years time, which is phenomenal growth. That's phenomenal CAGR. 30 would be insane CAGR per year. You know what I mean? 37 would be 24%. Like imagine doing 24% return per year on your shares. That's insane.
That's insane.
Do you have a quote about the OpenAI deal?
Yep, I have the exact quote here. Let me pull it up right now.
Okay, cool. Because someone asked about it.
On Athena, he said, quote, we are partnering with AI. Or sorry, on Athena, he said, quote, we are partnering with OpenAI as it relates to the voice interface. And we're excited about that, said David Steinberg. Now, essentially what he was saying, he was kind of asked a question about the back end of Athena, how it was designed, how they're going about sort of scaling that, and who developed it. And it sort of like really pointed toward the architecture of the product. And he said that the entire model was built by Zeta. They've always done this. Whatever model they develop is always in-house based off their own proprietary data. However, because this is a voice-activated product and is designed to have like open communication with the customer or the client, they went to OpenAI and they formed a partnership where they get to use OpenAI's voice model layered over top of Athena's base architecture. That is going to upgrade the customer experience so that when a client gets to use Athena and communicate with Athena, and Ronnie actually saw this in person, so he can kind of testify to how well it kind of sounded and how premium it sounded. That
Sounded
customer
great.
product, yeah, exactly. That premium product is there. So when you go today and you actually use OpenAI and you like whatever ChatGPT and you start talking to it on the voice mode, that exact same sort of refined feel, you're going to get that with Athena, but layered on top of Zeta's proprietary database and Athena architecture. So the entire backend is built by Zeta, but this top level surface, that communication layer, is done by OpenAI.
Yeah, phenomenal.
Great stuff.
Yeah, Woody Harrelson's in Salesforce commercials too. Yeah, and the thing about it is where I was going with that. So you have a $250 billion plus market cap company in Salesforce. Obviously, they make a lot more revenue, a lot more free cash flow, but they are legacy. They are more mature. They're not growing 20%. They're growing they're growing single digits revenue. They're a more mature company. But Zeta's down here at $4 billion, and they just had Tom Brady and Serena Williams, two of the greatest of all times, in two different sports at their event. And then they pulled in massive amounts of new clients and revenue from that event. And people were sitting there in the comments saying, why do they have Tom Brady and Serena Williams at these events? Why are they blowing all this money on the because it drives people in. I was in the room and the room was slammed. The room was slammed 3 times for Athena. What do you call it? The freaking the example with Athena, like the live interaction with David and Athena. Then Tom Brady and Serena Williams. Those were the 3 times the biggest room that they had, the biggest stage was slammed. Okay. So clearly we can sit here and now say they had a blowout quarter, double beat, raised guidance, gave guidance for 2026. Yeah, I don't think it matters that they had Tom Brady and Serena Williams out at their event, because now you can sit there and say, well, it didn't hurt them. It only helped them. So what are we even talking about? You know what I mean? So, yeah. But I don't want to be here on here all day, obviously. You know, I mean, I could be, but obviously I got to go be with the family, and it's dinner time. Patel, we'll leave some closing comments. Patel said, yeah, they only have 1% of the 100 TAM. I'm
That's
guessing he's
agency.
talking about
Agency. That's not just
for
marketing.
agency.
MarTech is much larger.
Yeah. So yeah, it's absolutely crazy. Zeta's a great company. Don't focus on hiring people for speaking engagements. Lots of companies hire Tom, Serena, etc. They're just paid to be there. They all tell the same stories as I've seen Tom at multiple tech conferences. Yeah, but again, like it's a draw in. Like I'm okay with it. I'm okay with it. As long as it's not affecting the bottom line or the top line and they're going to keep crushing. Like again, I was there, like it's a draw in. I get they get shelled around a lot and they go to a lot of events, but it's a draw in. You just have to ask yourself, how many people went to Zeta Global Live because of one of those two people? You know, there was multiple people that came there. And then out of those, if they even landed one deal, especially if it was $1 million plus, then it was worth it. You know? So yeah, I get it.
It's great. It's great.
Yeah, closing comments. I'll let you go, and then I'll give my closing comments, and then we'll definitely do this again. Definitely have to do this next earnings. Definitely
sure.
make this a thing. I'll wear my nice Zeta hat.
I need to get one of those.
What's that?
I need to get one of those.
I know. Hit up David.
Yeah, man.
DM David. I'm sure he would. David's so cool. David's a cool guy.
He is cool, man. You know what? I don't know if many people here know yet, but I was in conversations with Zeta and with David, kind of to go to Zeta Live as well. But I had my wedding, so it kind of interrupted that whole opportunity. But we plan on doing something in the future, so there may be interviewing opportunities. We'll have to wait and see. So who knows? Maybe I'll score a hat. But closing remarks. Something I noticed they didn't really touch base on was GEO, Generative Engine Optimization. So Zeta is a first mover in the MarTech space to actually employ this sort of technology. It essentially replaces legacy technology like SEO, which is search engine optimization, right? Essentially allows you to go out there with your marketing agency or whoever and make you noticeable on Google search. But as we all know, LLMs are actually kind of impeding on traditional search. Now, Google's obviously mitigating this by using AI overviews and all kinds of other things, but that's actually generative search, right? That's not a traditional search engine. So Zeta leads the way with this technology, and it kind of goes under the radar, right? Everybody's focused on Athena because this is glammy AI tool, but nobody really talks about the core product. And some of those core products are things like GEO. So when you're doing research about the company, these are those tiny little things that stick out, and you have to learn about them to know how they develop this edge. Because, for example, David said, quote, "We are the advanced player in our space. We are looked at as cutting edge." That's an exact quote, one of the closing quotes from David Steinberg himself. The CEO is super freaking confident and bullish about this company, and he knows that their product is leaps and bounds ahead of the competition. I recently put out a little recap. It didn't really get that much engagement on X, but I thought it was very important information. Maybe it was a little too detailed, but it dived into one of Forrester's latest AI reports, and it kind of explored the idea of, okay, in the MarTech industry, in marketing ad companies, how is AI being used? And is it actually being used well? Are customers getting results? And across every single search metric, every single study variable, Zeta scored the highest out of literally everybody, showing you that this company, even when you get third-party analytic groups that come out and do studies on corporations in a specific industry, Zeta is literally leading the way. So it's not just what management is saying. You get third-party agencies coming out here, filing reports and doing studies, proving that day in, day out. Anyway, so that's my little spiel. That's it from me. You guys can kind of follow me on X at Wealthmatica. Yeah, man, this has been crazy. What a great quarter. Ronnie, over to you.
Yeah, phenomenal. I love this slide right here. Zeta marketing platform consolidates all three: data management, marketing automation, and engagement. So all these individual some of these companies are just doing one, some are doing two, and then none are doing three. Right? None are doing all three. Zeta is just consolidating all of them. So the TAM is just massive here, guys. The massive.
Yeah,
They can go
that image right there,
reach into
Ronnie, that's exactly
all
what I
these.
was talking about last time.
Yeah.
You remember on our
Yeah.
last call, I was talking about the 3 pillars of
Yep.
Zeta? You have the
Yep.
CDP, ZMP, which is the middle one. That's the marketing platform. And then you
Yep.
have the DSP, which is the engagement. That's the programmatic ads. You actually deploy
Yep.
ads. They do all three. Nobody else does it. Only Zeta.
Yep. So absolutely phenomenal. Yeah. I'm honestly a little speechless
Yeah.
after their earnings, guys. Like, you go into earnings and you could be bullish and you could be buying stock in the company and stuff, and then they could still, like, take note when you come in bullish and you're like, yeah, I think they're going to do good. And then they blow what your wildest assumptions were away. When they do that, you got a great company, you got a great investment, and you need to not trade this stock. Do not trade this investment. I'm not going to trade this investment. I don't want to tell you what to do, but I think in 2, 5, 10 years time from now, if you trade this and you don't end up holding like longer term, I think you might have a lot of regret. Okay. I'm just going to be honest with you. So just figure that out for yourself. Obviously, it's your money. You guys do with it what you want. I bought 3,000 more shares in after hours today. 3,000 more shares on
That's
top of what
insane,
I already had. So, like, that's how bullish I am after that earnings. Like, and I'm not looking to flip them. If we're up 20% tomorrow, I'm not selling one of them. Okay. Like, I didn't buy them to flip them or trade them or anything like that. If this stock goes down tomorrow, like, if we get back down to like 5, like, say markets tank right off the open or something, like, I'm be waiting. Let the markets tank off the open, or let us have a gap down. Let Zeta get back down to like 5% up, or let them go negative. I will be spamming 2028 leaps. I will be spamming the buy button on 2028 leaps. I'll do some in the money. I'll do some out the money. Like, I will be spamming. Because the thing about it, guys, I don't think there's many companies out there that you could really be buying leaps on that it's a good risk versus reward. Like, honestly, like, if you're buying leaps for 2028 in Palantir right now, if we have a correction, if we have a crash, if we have a bear market, you probably are going to lose on those leaps. There's a lot of companies like that. When you sit there and you look at a company like Zeta, when you look at a company like Oscar, or these companies that are severely undervalued from where their mean is, where their fair value, where their intrinsic value is. When you look at that and you sit there and you understand this company's executing on a high level, well, then if we do go in a bear market, I think that Zeta and some of these companies, they have a like, they can only go so low. Now, I know that's crazy to say because everything can go super, super low and get really, really crazy. But again, like, the market will come down a lot just from the froth at the top getting knocked off. Like, think of this. If Zeta lost $1 billion in market cap, it's not even going to move the markets. But if Palantir, Nvidia, Tesla, Microsoft, all these like companies at the top, or like all these quantum names, like all together, if they all lost, like if they all went down 20, 30%, then the markets are going to be down like 10, 15, 20%. So just understand, you have to understand where we are at in things. There's definitely cycles. There's definitely bear markets to be had, corrections to be had. But this is where, as a smart investor, positioning yourself in companies that are undervalued and underappreciated that shouldn't be, is where you're going to win long term. Ronnie, only pick one, Zeta or Oscar. I can't. I'm sorry. I can't.
Zeta.
I can't do it. Walt Matic is going to pick Zeta. I can't do it. But like, I'll be honest. It used to be Oscar and then like Zeta, Delo, FLNC, Fluence Energy, and now it's like Oscar, Zeta, D local, like everything else. Like it's like 1-2, 1-2, maybe 1-1, 1-1, 1-1. Oscar, Zeta, guys. It's it's like they're so good, guys. But hey, we appreciate you guys being here. We hope we brought value to you guys. If you enjoyed this, definitely hit the like button, share with people, get the word out there about Zeta, and this great team. If you're watching this on YouTube, do me a favor, drop a subscribe. We're almost at 4,000 subscribers. Super awesome, almost there. Loving the growth over there, and definitely give Wealthmatica, Knots, Bull Trade Finder, and a cash that was in here earlier. Give them all follows on X as well. Great content across the board. But that's all I got. Go Zeta. Great job, David and team. Thanks for joining me, Wealth, and we'll definitely do this again soon. I appreciate you guys. Have a great day, and catch you guys in the next one.